Well, welcome to the ABG Investor Days. My name is Johan Brown, a retail analyst here at ABG. We now have the pleasure to welcome Walker Kinman, the CEO of LMK, to the stage. Please go ahead.
Thanks a lot, Johan, and glad to be here for all of you watching. Very happy and proud to present LMK Group, our business case and investment plan. My name is Walker Kinman. I'm the CEO of the LMK Group. So let's jump in. First of all, the LMK Group has been innovating the mealtime experience since 2018. So who are we and what do we do? We are in the meal kit business. If you are in Sweden, you perhaps know our brand in Sweden, Linas Matkasse. We do about 40% of revenue in Sweden. If you turn to Norway, we actually do a little over 50% of our revenue in Norway with two brands, Godt Levert and Adams Matkasse. If you're in Denmark, we operate under the brand Ret Nemt, which does the rest of the revenue. And if you think about meal kits, we are the largest supplier of meal kits in the Nordic market, and we're also a leader in Scandinavian food tech. We have a very strong heritage in innovation and entrepreneurship. And operating a meal kit model, it's a subscription-based, demand-driven business model that delivers a meal kit to the home, and I'll get into the detail what that is. But we have very little inventory, and we do a lot that reduces food waste in the whole supply chain and for the consumer. This last year, in 2021, we listed on the NASDAQ First North Premier Growth Market. We've been listed there since March, and the ticker symbol is LMKG. Give you an idea of the dimensions of the business. We did just about 1.4 billion SEK in revenue for 2021. We delivered over 23 million meals during the year and finished the year with over 100,000 active customers. Our distribution network reaches over 80% of Scandinavian households in these three markets where we operate, and we have around 470 employees working for the group. So just a little bit about meal kits, first and foremost. A meal kit is a very planned food experience, and you could call it curated. The process really starts with recipes and planning, and we do a lot of work in planning stage. We plan our protein 6 months in advance. We do detailed order estimates to our suppliers 10 weeks in advance. We continue doing that all the way up to the point where a customer orders their meal kit and the order is closed. Then we go out and we actually order exactly what's needed to produce all of the meal kits during the cycle. We do that in our own production facilities. We operate 3 in Gothenburg, Oslo, and Helsingør in Denmark. We deliver those to the home of the customers with third parties. The customers have all of the ingredients and the recipes and instructions that they need to prepare a meal for the family. They enjoy that, and then they give us feedback. We get lots of data that we use to analyze and further develop our product concepts, as well as feedback into the planning stage. So let's focus on key investment highlights for the LMK Group. First of all, we're a category inventor. We've also have a very scalable operational platform, a proven business model with our profitability and cash flow. We have strong exposure to mega trends. Sustainability is at the core of our business. We have been advancing personalization in a very rapid pace over the past years, and this paves the way for future growth. And we also are profitable with strong cash conversion. So let's look at this a little bit closer. The category inventor side, we've been operating in this space for over 14 years in the Nordics. As I said, we reach, with our distribution networks today, we can reach over 80% of the households in Norway, Sweden, and Denmark. Our brands are very strong with things like high top-of-mind scores, and it's also giving us the ideal platform for further product line extensions and growth. When we look at consumer surveys and we compare this to our brands, they rank high on innovation, quality, healthy, well-balanced food, and excellent taste. Finally, we also have a state-of-the-art infrastructure platform, which we've built ourselves and is next generation. So if we think about the scalable operation platform, this model has been evolving for over a decade. It has given us profitable scalability with high accuracy and low customer complaints. Our transportation is fully outsourced to third parties. We don't have any transportation assets ourselves, but we operate very closely with our partners to control the flow of our meal kits to the final customer. We've integrated our operations across Sweden, Norway, and Denmark, Today we're operating on one technical platform with one production technology that we use to produce a highly personalized meal kit today. We have a very hard to replicate procurement network. We work with over 100 different suppliers that are very local and have been established with long relationships. And finally, as I mentioned, our technology is self-deployed, and we use everything is the same in all three of our production facilities and our operations. So let's take a quick minute to look at the business model. This is a proven business model for us. If we look at it, you can see a subscription e-commerce model is somewhere between a SaaS model as well as a regular e-commerce model. The customer acquisition payback is far shorter than the SaaS model. At the same time, our repeat revenue outclasses regular e-commerce type of models. So with this subscription model, you get high retention rates, a loyal customer base, you get higher order frequency, a good demand predictability, and also with the way we have been able to structure our business, strong cash flow conversion, and negative working capital for growth. So meal kits are really tapping into a global trend here. It's an increasing shift from offline to online, and online penetration of food is still limited in the Scandinavian food market, but obviously with COVID and the pandemic, we have seen an increase in an acceleration of uptake in e-commerce food. There's also an increasing awareness of food-health relationships. So things like vegetarianism, humanitarianism, environmentalism are on the rise, and we tap into that with our products. There's definitely a call for action with regards to climate. And a lot of consumers around the globe are definitely and probably willing to change a behavior to reduce their impact on the planet, which ties into our business well. And finally, the new convenience. Longer working hours, commuting, active lifestyles, all are driving consumers towards things that make life easier and simplify life when they're time squeezed. So as you look at meal kits, less food waste, local suppliers, a demand-driven supply chain, healthy cooking made easy in the home, flexible meal choices, perfect portion sizes, less carbon emissions, and saving time for families and households around the mealtime experience. Sustainability has been with us long before sustainability was a buzzword. And a big part of that has to do with reducing food waste, both with our suppliers and with our consumers. We deliver a perfectly balanced meal. We only order food that we deliver, which means that the food waste generated in our own production is only 1.8 grams per meal during 2021. We're teaching customers how to cook without creating food waste, which has an even bigger impact of reducing food waste in the home. And then we also work with our supply chain, even from forecasting so that things are not overproduced, to using odd cutting details and reduced packaging material, because we don't need the grocery store presentation in our production and operations. If we look at 2021 and sustainability, we adapted a new sustainability policy during the year. We've begun reporting on food waste in our own operations. We launched climate calculated recipes so that consumers can also be active in and understanding how their choices have an impact on the environment. We've gone through an exercise with purpose and culture statements to really drive a strong employee engagement in all areas. We work around a tool we call the compass that helps us in orientation in all sorts of decisions within our enterprise. And finally, we also introduced a plastics promise during 2021 with a reduction of plastics in our meal kits by 20% to 2025. So when we think of impact areas, we talk about food waste, we talk about food products, resource consumption, health, and social responsibility. Let's take a look at personalization and how it paves the way for growth. We are in a business been operating for a long time, and if you knew, for instance, the Linas Matkassa brand in Sweden 5 or 10 or 12 or 14 years ago, you see a completely different product today in what we offer. The market in the Nordics has moved from fixed meal kits to flexible meal kits. So what does flexibility and personalization mean at different levels? For one, it's the service level. It's also the delivery days. It's the meal selection as well as adjacent products that you can order with your meals. And if you look at our business today, we've gone from not being able to choose really anything except a fixed menu for the week to today, we offer, even in Sweden, we offer 83 different recipes to choose from that can be delivered to every household within our distribution network every week. So a lot of choice in talking about personalization. When we look at service levels, we've shifted from 6 to 14-day order to delivery times and even bi-weekly delivery models. Today, our order to delivery times at most are 7 days, and we operate on a weekly delivery basis everywhere we go. Our delivery days have been 1 to 2 days, with differences in different countries. We're aiming, and this is the area where we have still the most to do in the future, but multiple delivery days in all of our markets. And when it comes to adjacent products, we've also expanded what we offer in terms of adjacent products, including a mini free pick model with groceries that we deliver as well every week, up to 150 different very common household items. You can think eggs, butter, milk, cheeses, breakfast items predominantly, as well as after-school snacks for households. So we completed a transition during 2021 to 100% customer-unique production capabilities in our production facilities. And this opens the door to some really interesting product and service innovations going forward. When we think about growth, this and the personalization, it's also fueled by 3 different key levers when we think about growth. So a basic model: increase the number of customers, increase the order frequency, and increase the average order value. So when you think about customers, we have expansion of customer segments via increased product and delivery flexibility in our potential grasp. We have increased penetration in the current markets and customer segments. And we also look very much towards marketing efficiency to continually improve the marketing efficiency of the money that we spend to attract new customers. When we think about order frequency, it really comes down to flexibility. Order frequency driven by things that will keep the customer coming back, increased product flexibility, increased service flexibility, and enhancing the digital and physical customer experience. And finally, on average order values, expanding into our mini free pick model has increased average order values. We also use AI and machine learning to give recommendations to customers on upsale, premium recipes that customers can also select from and pay a little bit more to get an even better recipe with maybe a little bit more expensive ingredients to prepare at home. And then finally, also, we've talked about the introduction of ready-to-heat in our latest earnings call, and we'll be expanding the addressable market within the existing geographic footprint. And finally, looking at profitability. So we talk about profitability with strong cash conversion. We start with a good customer base of loyal customers. Our average customer has been with us for over 2 years. The amount of revenue that we generate, which is repeat revenue, is around 94%. So this is really, as a subscription model, it's about loyal customers and it's about repeat business. Our customer acquisition economics, we targeted around 6 months of customer acquisition cost payback. Our unit economics and margins, if you look at 2021, we did roughly 204 crowns of contribution margin per delivery, and we had an adjusted EBITDA margin of 7.6% during the year. When we think about the cash side of the business, negative working capital is inherent to this type of business. We collect cash from customers in a very short cycle. We pay suppliers basically on 30-day payment terms. So if you look at the working capital, we run about negative 5% in working capital. On the CapEx side, it's also a light CapEx model. 2021 was one of our highest investment years where we introduced significant change in production technology, and we integrated our Danish business and completely changed operations in Denmark. And we saw CapEx come in at 2.2%, which will be much lower going forward. So foundations for profitable growth are in place. If we take a breakdown on the unit economic side and look at our business model, an average order value, 100% of revenue, our cost of goods sold is made up of food cost and packaging cost, as well as our staff and experienced personnel that are doing planning and sourcing activities. It's roughly about 43% of the cost that goes into our cost of goods sold. When we look at the fulfillment side, we look at production cost and we look at logistics cost. You can think of this as roughly 22%, which gives us a variable contribution margin, excluding fixed cost, of roughly about 35%. as we look at contribution margins approaching 30%. So we have a very solid unit economics model, and we have a lot of tools to control unit economics, both in terms of how we control the content of the meals, how we control and forecast pricing with suppliers, as well as purchasing power in terms of adjusting prices as needed and given market conditions. So finally, to summarize, we've been in this business for a long time. We're a category inventor, and we have a scalable platform with a proven business model. We're in a position to benefit from megatrends, and our business will benefit from those as they continue. Sustainability has been with us for a long time, with a very much a focus on reducing food waste in both our own operations and how we work with suppliers and in the food distribution chain, but also in educating customers, and we're very passionate about that. As we increase personalization, this offers a growth vector for us, and we have changed our operations to be completely 100% customer unique in every delivery that's given. And then finally, with a profitability and a strong cash conversion, we offer investors the possibility to invest in a company that is already proven their business model and is profitable today. So with that, I'll just conclude my remarks. Turn it back over to Johan.
Thank you very much, Walker. So a few questions from me, and I want to start to talk about margins. You've obviously, as many other e-commerce players, seen contracting margins during 2021, partly increasing customer acquisition cost, partly freight rates and the likes. Where do you see this going forward, and what's the sort of way back to the 6 to 8% margin target?
So for us, we've gone through a year of quite a bit of change. So for us on the margin side, we are targeting 30% margins in our business. We have a path to get back there, and that has a lot to do with the introduction of pick-to-light, which is a technology for personalization, slows down efficiency in the short term in our operations, and that increases cost on the production side. But we also have some significant initiatives when it comes to the supply chain management. We have fully integrated the business across all 3 markets now. And for the first time, we have adapted the organization to be able to take advantage of purchasing power on the margin side. We made a lot of investments in marketing in 2021, and we increased our marketing by over 35%, a significant increase in terms of total costs that we put out on the marketing side. And I think, over time, what we say is we control sales and marketing, and we keep that under 13%. So this for us is a way to maintain margins in the 6 to 8% range over time.
Great. And then I want to talk a bit on this same topic and competition in general, but also these new players coming up as of Foodora Market and Kaval and the likes. How do you assess the general competitive landscape, but also these new players coming in, and how those affect the general margins in the industry?
Yeah, so quick commerce has a lot of players coming in. There's a lot of capital that was allocated with lower cost of capital to new ideas within quick commerce. I think fundamentally everything has to reach a point where you are achieving profitability, and that is something that we're very proud of in our business. I think over time we're starting to see exits in the quick commerce space for players that have not achieved scale or don't see a path to scalability. Over any competition impacts margin. I think that's pretty clear. Consumers will at times have a preference for something that's even more convenient than the convenience that we offer in terms of making meals very easy in the home. We're not going to be able to compete directly with a 20-minute delivery of a meal kit. But I think on the other hand, what we can do is we can offer very affordable, convenient food in a more structured manner. So while you have other competitors that will be able to offer that at a much higher price point, we can give a very good price point with a lot of convenience in a meal kit offering.
That makes sense. And then you touched on it a bit as well, the increasing average order value and the sort of premiumization of some services and the likes. Do you have an idea of how you stand versus your direct competitors in terms of the average order value?
We because of the strength of our brands and because of how well we're known and the quality of the product that we deliver, we do have the ability to charge slightly more premium prices in our markets. We have other competitors coming in that are looking to compete on price. You know, one of the things I say in this business is that we don't sell food, which of course is a complete lie. We sell great food, and it's very good food. But what customers are actually paying for is they're paying for the service of the meal kit. So by driving the service side of the equation, we have the opportunity to continue to have good pricing power in the market. I think when you look at average order values, the other thing that really has affected our average order value, and is something that we're working a lot with, is in the realm of AI and machine learning. What we have is a tremendous amount of data, and in that data we can also see very strong correlations between what people buy in certain groups and what others are likely to buy, and offer those likely to buy scenarios. It also gives us the opportunity to put premium products in front of customers in a way that gives them you know, the opportunity to pay a little bit more and get something that they're likely to like because we know other groups of customers like it. So I think we're very much tuned into driving increases in average order values beyond just pricing power in terms of what the offering and the service offering is about.
That's great. And then I want to move on to the maybe obvious question as what's happening in the world currently, the Ukraine and Russia situation. Obviously, no particular exposure for you in those regions, but maybe there are some indirect effects in terms of raw material costs and freight costs and the likes. Can you sort of explain and elaborate a bit on how this affects you?
Well, obviously distribution is part of our business model, and one of the benefits to the customer is distribution of food directly to the home in the form of a meal kit. So anything that ties into energy costs that are related to logistics and transportation has over time will have an effect. And I think, you know, the volatility that we're seeing in oil prices right now, we don't know how that will shake out in terms of how it impacts carriers, other than that their costs have increased substantially. I think you know, the other impact that we're hearing about, but we're not seeing yet, but I'm sure will come if there is a protracted conflict that affects harvest and whatnot in that region, is the price of wheat. And as wheat is a staple product that affects many different types of products, I think over time that's an area that indirectly begins to affect a very large portion of the food value chain. It also drives different areas within food production. So.
Great. And then a last question from me as well, and this is regarding the market growth, and we're obviously in a quite interesting scenario where we actually see contracting market growth rates for several e-commerce industries, and so for you as well. When do you see this market returning to growth, and what sort of growth rates do you see in a complete post-pandemic society?
Yeah, I think, you know, from our side, what we have communicated about our own business is that we do expect contraction here in the first half of the year. When it comes to further beyond, our base case is that we will see growth commence again in the second half. I think from the long-term perspective, there's a lot of volatility right now in this whole in the market when it comes to e-commerce and e-commerce food, and we see this not only impacting players like ourselves, but also the broader e-commerce food spectrum. I think, you know, in the long term, habits are changing. Food is becoming much more accepted as something that is delivered to the home. The capabilities to do it in a fashion which also beats traditional retail models with very low food waste is very appealing for many customers, as well as the ability to get a great variety of food there. You don't have to do the work other than just click on a button and say deliver. So I think growth has potential, and we target growth that is double digits over the long period. And I think when we say double digits, we're saying very low double digits. We talk about 10 to 12% growth. We still think that that's feasible in the long term. The challenge short term is quite obvious. There's some very difficult comparable figures out there for us all over the next 12 to 18 months.
Great. With that, I'm out of questions. So I want to thank Walker for presenting today and everybody for listening in. Thank you very much.
Thank you.
Welcome back, everyone. My name is Marcus Henriksson. I'm a real estate analyst here at ABG Sundal Collier. Next on this track is Logistea with CEO Niklas Zuckerman. This is a company that was formerly named Odd Molly, but now it's a purely property-focused company. So I will leave it over to you, Niklas.
Thank you very much. I'll come back to the history shortly, but as said, we are today a property company with full focus on logistics, warehouse, and light industrial properties. A few numbers. We're listed on the mid cap on Nasdaq. We have a market cap of roughly 2 billion SEK. Property values per year end 2.6 billion, and if we include recently signed deals and signed LOIs, we are at 3.8 billion. Roughly 300,000 square meters of properties. We have an additional 237,000 square meters of building rights, which is of great importance to us. Net LTV of just below 56%. And the main owners are Ilja Batljan, Rutger Arnhult, Phoenix Insurance Group, Hansson Holding, and Dragfast. We presented the other week a new strategy and new financial and operational goals. To summarize the strategy is that we'll create value by active management, develop properties on own land, and be very active on the acquisition market. On the acquisition market, we're basically doing one deal every second week. And at the moment, we're doing mainly slightly smaller deals, so in the range of 50 to 200 million SEK. And just because there we see that we can create more value, basically. It's less competition and we can do better deals, basically. To highlight a few financial and operational objectives, we should have a growth in the NAV per share by 12% every year. The LTV should not exceed 60%. We should create a property portfolio at a value of 15 billion SEK by the end of 2024. We should, on an annual basis, create or produce new properties at own land in the range of 25,000 square meters. And 50% of the loan portfolio should be green financing by the end of 2026. Short on the history of Logistea. As said, it used to be a fashion company. In 2019, the first property was bought. And since 2020, it's been full speed ahead to be a property company instead. New management was hired in 2021. We changed the name in 2021 to Logistea from Odd Molly. And we sold and distributed the fashion business to the current shareholders. Apart from myself being the CEO, we got Anders Nordvall and Tobias Löfstedt with full focus on transactions. Philip being responsible for the financials. Marlene Broman, who's heading up the property management team. And joining later this month, we got Maria Kruse, who will be responsible for sustainability and IR. We're also, I would say, very proud of the board of directors and the active management and the active owners, the main owners, and we feel that that group together with us is a good force to drive the business forward. We also presented the other week new sustainability targets. Worth to highlight is that all new productions will be according to BREEAM, very good or excellent. We got a green finance framework, and we issued a green bond last year of 500 million SEK. And we're also very proud sponsors of Grund & Boyce in Gothenburg. So why invest in Logistea? We've summarized six reasons why, and I'll come back to those in the coming slides. The first one, obviously, is that there's really strong market fundamentals when it comes to logistics, warehouse, and light industrial. Increased demand from the tenants, high turnover when it comes to the transaction market, and that's driven both by domestic and international players. The percentage of e-commerce versus normal trade, so to say, is increasing by the day. And we also see a tendency, and that's really important, we see a tendency that a lot of companies, they're looking to move the production closer to their home market. And there we see that we can find opportunities to grow with really good, stable tenants. The current property portfolio, it's a good mix of logistics, warehouse, and light industrial. We are mainly today focused on southern part of Sweden, even though we got a few properties coming in northern parts. But today we are very large in Borås, for instance, and the Jönköping area. We will look into different parts of Sweden. As long as there are good micro locations and strong tenants, we'll consider those locations as well. And as we said the other week, in the long run, we might consider some of the other Nordic countries if the right deal pops up. As said, we favor long leases. We didn't recently signed LOIs. The WALT has increased to 8.5 years, which is, I would say, extremely long. We've got 80% of the leases on triple net, meaning that the tenant bear all the operational costs. And the current occupancy rate is 97%, which is high. Looking at the tenants, it's a good mix of e-commerce tenants and logistic tenants. And as you can see, most or top 7 out of the 10 largest tenants, their lease expire in 2027 or later. Fourth one is an attractive yield gap, and basically you could say we're buying properties at the range of say 6 to 7.5%. They're currently valued in our books at 6%. Our cost of cap or our cost of debt is at 3.1, and that's a mix of roughly 1 billion SEK worth of bank loans and 500 million SEK of bond loans. And the blended cost there is 3.1, but that still leaves us with a great yield gap of almost 3%. As I said, we got great ambitions to grow the company to 15 billion SEK within 2.5 years, and we believe that once we get closer to that goal, the cost of debt will go down, and obviously the yield gap will increase even further. The rental income is basically increasing by the day. We are as of today at 165 million SEK for the investment properties, as we call it. If we're adding the project properties, we're at 198 million, so almost 200 million SEK in rental income. Current NOI, including those properties, is in line with 165 here. So obviously we're growing fast. We're doing good deals, and with that follows increased rental income and NOI, of course. Fifthly, then, and this is one of the things that will drive the business. We have a very good and large land bank, so we'll produce new properties on own land. And why are we doing that? Basically, it's a good deal. Basically, we'll come back to a few examples, but the yield on cost for these type of investments are 7 to maybe 8.5%. We got large land banks, especially in the Jönköping area and the Gothenburg-Borås area, and we'll look to buy more land, basically, because we believe that it's a good investment for us, but we also believe that we need land in order to grow with our existing tenants. And as said, the goal is to reach 15 billion SEK by new acquisitions and own developments by 2024. A few examples of existing properties and developments. The first one, end of last year or in October of last year, we bought a portfolio of 7 properties, 100,000 square meters, 30 tenants, 6-year remaining lease term, and here we paid an initial yield of 7.9%. Second one is in Viared, Borås, which is the best logistic part of Borås. Slightly shorter leases, 2.5 years remaining, and here we paid 6.7% yield. Third one we did in the other week in February. We paid 6% for a triple net lease, 15-year lease with the tenant Arome Decor. So newly built, prime location there, and long lease, and then we're paying 6%. The 3 properties to the right are developments or extension. The first one is a property that we acquired in 2019. We're extending it by 2,500 square meters, and at the same time we're installing solar cells. The yield on cost on this one is 7%, fully let on a 10-year triple net lease to GDL. The second one is in also an extension, yield on cost just above 8%. It's 70% let to e-commerce tenant Sellbes on a 12-year lease, and this is in Borås. And thirdly, new production in our large development site in Vaggeryd, south of Jönköping. We're currently constructing 13,000 square meters, to 3 tenants at a yield on cost of 8%. So to summarize, why invest with us at Logistea? Obviously, extremely hot and good fundamentals in the light industrial warehouse logistics segment, increased demand from tenants that will drive, hopefully, rents in many parts of Sweden. We're presenting the other week improved financial overalls, growing company, and that's shown in the numbers. We got a new business plan that we'll implement that will create value for the investors and the shareholders in Logistea. The growth, as I said, will be driven by transactions, new development, and active management. And it's worth to mention and point out that our transactions team is probably one of the best in Sweden. So they will do good deals in all cycles. And currently, as I said, we're doing mainly smaller ones, but that might change if the market changes. And finally, very strong and active shareholders, and that's important because we are getting good deals from them, but we're also getting good financial support once we grow the business. I think there are 2 slides appendices. The main owners, this you can find in the presentation at ABG's website. And there are some income statement and balance sheet as well, and obviously all of this can be found in the reports presented on our webpage.
Perfect. I guess we move on to some Q&A. You talked a little bit about reaching the target 15 billion up until 2024, and you said acquisitions and new developments. How large part would the development side be, and is it mainly from acquisitions that's going to reach you the target?
It will be mainly from acquisitions. The target of producing 25,000 square meters a year at least, that means something in the range of, say, 300 to 400 million SEK. And we need to grow by 3.5 billion SEK a year. So it will be mainly acquisition. But it's really important, as I said, that we have land available, and if we can produce more than 25,000, that's all good and perfect. But to start with, it will be quite a lot of acquisitions.
Mm. And the LOI you have with the battery company, should that be seen as on top of this? Because there's a lot of uncertainties, I guess, surrounding zoning plan, etc.
That should be seen on top of this. So as you said, we got an LOI with a tenant. We got you could say similar LOI with the municipality of Swedencare. Everyone is working hard to get this done, but that's on top of this. That will be a game changer for not only Logistea but for that region as such. So that's on top. And you know, there are risks maybe with the zoning plans, etc., but less of a risk when you're in a location like Swedencare compared to, for instance, Stockholm and Gothenburg. So great support from the local authorities to get this done. So we see little risk with the zoning plan process there.
Yeah, maybe more with the time. Like it usually takes longer time to build out than everyone hoped for. But everyone is supporting.
Yeah, it's a massive project, and one should have respect for that. But as I said, everyone is working towards to get it done, and you know, fingers crossed it will happen. It would be good for all parties. But it's a massive project, and we're still early in the process.
I agree. It's super interesting. The NAV target, you have 12% per annum over a business cycle. Could you break that down a bit? Cash flow, projects, leverage?
That would vary, I would say, year by year, depending on how much own development we do. But in general, we buy properties at yield of between, say, 6 and 7.5. As we presented, the They're valued at 6% right now, so there is some NAV there. And we typically, if we have a yield on cost on a project of, say, 7.5% or 8%, that type of property, newly built, good tenants in good logistics locations, they are today traded at, I don't know, 3.5% to 4.25%. So obviously that creates a lot of value. So it will vary over time, depending on how much home construction we do and the versus how well we are doing on the acquisition market. So it will be a bit mix of both, and obviously, as we said, that the cost of debt is now 3.1%, and everything equal. Once we grow the company with good, stable tenants, we're hoping to get that cost down. So all of those three will be important factors to drive the NAV.
Mm. Do you see it as an ambitious target? We've had several years now where NAV growth in the sector, maybe logistics in particular, have been above 20%, but worst thing can happen in the world. Currently, it's a bit messy around the world. What do you feel? Is it ambitious or reasonable target?
No, but it's obviously we set the target before the war started in Ukraine, but it's still a reasonable target. With the strong owners that we have, for us, it's not the end of the world. If the transaction market slows down, for instance, probably we can do better deals then. So I would say it's a realistic target, absolutely. The demand from the tenant within this segment is extremely strong. It was partly driven or it was speeded up because of the pandemic, but we see no slowdown, so to say. And as I mentioned, we wouldn't be surprised if we'll see an increased demand from tenants that will move their production from elsewhere to Europe. And that could be Sweden and other European countries, but we'll probably see a few or quite a lot of companies want to move back to production to Sweden. And there we want to be. We want to be part of that journey, so to say.
Agree. Interesting trends. There are several logistics companies in Sweden. What differentiates Logistea from the crowd?
Hard to comment on each and every one of them because I don't know them that well. But we believe that we have a good mix of extremely talented and experienced transaction people. So we believe that we will do the best transaction in all cycles. At the same time, we have also an extremely good team doing their own developments, and it's not easy to be fair. But we have a good team doing that, so that we make sure that we produce. Or that the costs are in line with what we believe they should be when we started. So that mixed together and together with a good active management, we can do we can do everything, you could say, within the logistics segment. If there's a great demand for new production, we can do that. If the transaction market is cheap, so to say, then we can do a lot of that. So we're open to do basically anything depending on where we can do the best deals. And also we like the light industrial segment as well. Not only the pure logistic hubs, 30,000 square meters leased to one tenant. We also like those, but they are a bit too expensive for us to buy right now. So we're more producing them on our own land, and what we buy is a mix of logistics, warehouse, and light industrial. And one should remember, many of the light industrial companies, they are doing extremely well. Profitable companies that have been around for 10, 20, 30 years. And we're doing many transactions where we're buying the properties from them, and in many cases they get partly paid in Logistea shares, and so they are, so to say, a part of the family, and that's the type of transactions that we like a lot.
And when you do acquisitions, what's the most important for you? Is it stable tenant? Is it stable rents with low downside risk? Is it yields, location? What do you what's your favorite acquisition if you have to pick one of those kind of
if I have to pick one, then it would probably be, you know, location is obviously always important, but we would not do a deal if the tenant is not doing well. So we will look into the tenant if they're profitable. That's the most important, I would say, and it has to go. Obviously, we want to make sure that they can pay the rent for the remaining of the lease term, but we also want to be or find those type of tenants because they will expand. And we want to be part of that when they either expand in the existing property or build a new one. And so, you know, that type of properties or that type of tenants that are doing well, we tend to start there, so to say. But all of the aspects that you mentioned are obviously important, but creditworthiness of the tenant is extremely important for us.
Mm. You talked a little bit about project management and how does the organization look like when it comes to property management? What do you outsource? What do you do in-house? And same with the projects.
We do so. Starting with the projects, we do it on ourselves, or we do it. We got our own organization, so we run the project. It's not that we hire a consultant. We got that expertise in-house. On the property asset management, we do everything apart from the technical management, which we buy mostly from the former seller. They got good people on the ground, and so we hire them or we. But otherwise, we're doing the commercial property asset management ourselves. So discussions with tenants, etc., add-ons, etc. We do on our own.
All right. A bit about financing. You talked a little bit before, you know, growing up to 15 billion. I agree. You should be able to get better financing than you have right now, all else equal. But looking at the interest maturity now, it's at 0.5 years. Sector is at 3 or slightly above 3. What do you think about that? And are you looking into swaps or what are the discussions with the banks?
No, sure. I agree. Both us and our bank colleagues agree. So we're looking into swaps or caps, and it wouldn't surprise either myself or you if you'll see that type of instrument in our loan portfolio within short.
Okay, all right. You are from the property market for a long time. You know the market well. What trends do you see? You mentioned that we are gonna we had a lot of years of outsourcing coming back to Sweden potentially. But what do you see in logistics, light industrial in terms of rental levels, yields, supply demand?
Yeah, it's been extremely hot or basically since the pandemic, together with the residential market. So in a European perspective, we're seeing yields at 2.5%, maybe even lower for the best urban logistic properties. As of today, there is massive competition when it comes to the larger lot sizes. That will continue, I'm pretty sure. On the rental side, many believe, and we have seen rental uplifts, especially in the major 3 cities of Sweden. So suburban locations to Stockholm, you've seen great rental uplift, and that has come with or what we have seen as a result of that is it's become quite expensive on the transaction market, maybe a bit too expensive for ourselves to buy in good suburban locations to Stockholm. We don't disagree that there is a rental case, but we today we see better transactions elsewhere in stable, good locations in cities like Borås or Jönköping or Växjö, or we did a transaction in Jönköping the other week where we're buying at 4.75% newly built warehouse, long lease, and we're paying with our own shares. So we tend to do those type of transactions rather than competing in suburban locations to Stockholm. But you know, they might be right. But for us, we see better use of the money elsewhere today.
Yeah. I think it's time to wrap up. Thank you, Niklas, for presentation today. We'll soon be back with the next company in track 2, so stay tuned. Thank you.
Thank you.
Good morning, everyone. My name is Gonzalo Artiach, and I'm an equity analyst here at ABG. The next presentation will be IRLAB Therapeutics, a Swedish company focused on the development of pharmacological treatments for neurological disorders, with a primary focus in Parkinson's disease. With that being said, I will give the word to Nicholas Waters, the CEO. Please, Nicholas, the word is yours.
Thank you very much, and good morning, everyone. As Gonzalo informed, IRLAB is a company focusing primarily on Parkinson's disease. We are building a pipeline in that domain. Gonzalo, can you change to slide 3, please? Next slide. So, at present, IRLAB is in a quite new and interesting position. We have a very strong cash position. I'll come back to that. Since we have a big partnership with a global pharma company, Ipsen. We have 2 programs in clinical phase 2b, studies we are running right now. And these are indications which have quite substantial potential for revenues in the future. We have a highly efficient discovery platform delivering new drug candidates over time. And we have now a number of preclinical assets moving towards phase 1. And also we have a proven BD function, sorry, where we have built up a structure to be able to strike further deals in the field based on our pipeline. Next slide, please. Over the years, we have expanded our operations, and in parallel with that, we have also been able to build up our cash balance. And as you can see in the center slide here, since 2019, we have expanded the cash situation to now around 400 million at the end of the year, 400 million Swedish kronor, that is roughly 40 million euros. So we have been quite diligent in making sure that we have a runway for the commitments we take in terms of clinical development and preclinical discovery. As you can see, we have a quite stable burn rate over each quarter since going back a few years. We burn around 25 to 30 million Swedish or 3 million euros per quarter. We expect to see a similar burn rate in the coming period. Next slide, please. As indicated in the beginning, we have a strong focus on Parkinson's disease, and this is a devastating neurodegenerative disorder where you lose a number of neurons in the brain, which leads to primarily motor complications, which are well known, but also other symptoms, neuropsychiatric symptoms and balance problems over the course of the disease. And we have been targeting various aspects of the complications that occur during the progression of the disease with our programs. We have looked at the mechanisms responsible for the symptoms, and we are addressing those by means of our ISP discovery platform to discover new treatment strategies to address those unmet needs. Next, please. We are using our proprietary ISP platform, the integrative screening process. It's a phenotypic strategy where we use machine learning and AI to support design and evaluation of novel molecules active in the brain. This allows us to discover unique and new classes of CNS compounds, which we pursue in clinical development. Next slide, please, Gonzalo. So this is the pipeline. Once again, at the top, mesdopetam, which is a drug designed to treat dyskinesias, which are involuntary movements in Parkinson's disease, but also to treat psychosis, which is a common symptom in Parkinson as well. And then pirepemat, which is a drug designed to improve balance and reduce falls. In both these instances, we are the first molecules, or we have the first compounds in 2 new CNS classes addressing these complications. We judge that we are 4 to 5 years ahead of any competition in those areas. Then we have the P001 and P003 preclinical discovery and development programs. The P001 program, we are now pursuing one clinical candidate towards clinical development, and that is to improve cognitive function primarily, but also to treat, to increase brain health in neurodegenerative disorders, including Parkinson, of course. And then the P003 program, where we are developing a new type of treatment for the principal symptoms of Parkinson disease. The partnering strategy for these assets is quite simple. We are focusing on reaching deals at proof of concept. That's somewhere in phase 2. However, with an increased interest in our pipeline and our work, we have also now started discussing the preclinical programs, where we're looking at the possibility to partner preclinical programs already before or in conjunction with phase 1 studies. Next, please. As mentioned, we have a licensing deal. We struck that this summer with Ipsen, and that is to pursue the development of mesdopetam to a product on the market. This has opened up a number of possibilities for us. First of all, we've been on a growth path for the past 3 years now. We have increased our number of employees from around 15 to around 30 today, supporting the programs and discovery and development, mainly in the late-stage development efforts. Our current focus is, of course, to expand the clinical operations. We are now running 2 large international phase 2b studies. We are increasing our business development efforts and our IR efforts. We have an organizational focus right now on the PEPMOT study, which is designed to prevent falls. This is a huge undertaking for us. We're doing a 165 patient study across European countries. And then in the P001 program, we are focusing on 2 different symptomatologies in the sector. That is cognitive function and apathy. I'll come back to apathy. It's an interesting problem for people with neurological disorders. And then the P003 program, of course, we are now looking forward to defining a new CD in that program for development. Next, please. So with our diligence strategy, we have now, in the period we are now, 20 to 23, we have kind of built the base for the growth strategy that we have employed right now. We have, as I said, a number of clinical assets in development with good prospects of delivering interesting and valuable data to patients and to the society. Besides that, we are further developing our discovery platform, improving its performance further, and we are working with our BD efforts to find additional partners for the programs that we have generated. We expect to be able to conclude phase 2, phase 3 study or phase 2b studies within 23 for both of these programs. We will also see the start of phase 3 studies early mid 20s, and by the mid to late mid 20s, we expect to have our first marketing authorizations submitted. Next slide, please. A slight deep dive into the preclinical assets and the P001 program, which is a quite interesting class of compounds that we have discovered, and it has been nominated by WHO as a totally new class of CNS active compounds. We thought it was our duty to add a number of molecules in this space. If one looks at the potential market here, about 12% of all adults over 65 enter up in a position of cognitive decline during their life. And this is especially so in neurodegenerative disorders, neurological disorders. With that comes also a quite common symptom, perhaps the most common symptom in neuropsychiatry and neurology, and that's apathy. And that is estimated that over 10 million individuals in the US suffer from apathy, and that also extends into the caregivers, complications for caregivers. This is quite a big problem. There is no pharmacological treatment available today, which has been proven, and we see a huge potential here. The problem with both the cognitive decline and the following apathy is a disruption of certain neuronal pathways in the frontal lobes of the brain. And we have seen that drugs or experimental compounds in the P001 program can actually restore function in exactly those pathways. So we see a huge potential in this group of molecules. On the right side here, you can see the prevalence of, from various studies, prevalence of apathy as a symptom in various neurodegenerative disorders. And you can see in Parkinson's disease, up to 70% of patients are suffering from apathy. Next, please. In the P003 program, we are focusing our efforts now on looking at early stages of Parkinson, the initial symptomatology, rigidity, stiffness, shaking. And the common treatment there is levodopa. Levodopa has its fantastic benefits, but also some drawbacks. And that is the constant administration of levodopa that is necessary up to, in some cases, even up to 12 times a day you take your pills. This creates a quite substantial variation in the plasma concentration and, as such, also the response. There is another compound, apomorphine, that is used to rescue motor function in many patients. This is also a compound with a very short half-life. It doesn't stay around in the body for a long while, around half an hour or so. It has quite good effects, but you need to take it often. So we see a quite substantial opportunity here, the potential to transform the treatment paradigm for Parkinson's disease with a long-acting strategy, administering drugs at quite low doses, which could sustain motor function over a 24-hour cycle or 12-hour cycle, actually. Right now, we are in lead optimization with the first generation of molecules, and then we have a second generation of molecules in the making. We're looking at candidate identification there. If everything goes well, we expect to be able to see potential candidates during this year. Next slide, please. A few words on pirepemat. If you can move ahead to the next slide. Thank you very much. Pirepemat, as I said, is designed to improve balance. And balance is governed by many systems in the brain and the body, but there is one very essential function that is occurring in the forebrain as well. Pirepemat has the potential to strengthen those functions of the brain and the potential to reduce falls. We have completed a phase 2A study where we have seen improvement in balance and reduced risk of falling. Falling is a huge problem in Parkinson's disease. Around half of all patients fall recurrently. This leads to fall injuries and also to quite substantial costs, both for the people suffering or living with Parkinson, but also for the payers society. So there is a possibility of actually receiving a quite substantial price on a compound like this, or a treatment addressing falls. And as I said before, we are ahead of competition here with our phase 2B program right now. Next, please. Just before Christmas, we received approval to initiate this study across a number of countries in Europe. So we are now initiating sites across Europe to be able to recruit patients for this quite interesting and from the physician's point of view, popular study. This is a huge problem for patients, and we are focusing on one of the biggest problems for Parkinson patients. The primary objective of the study is, of course, to look at the falls frequency and see if pirepemat can reduce that. So based on the phase 2A data, we have good hopes. We will also follow up with a number of other aspects of Parkinson symptomatology in this study, such as the cognitive and the standard Parkinson symptoms. So this study is now in the making. Next, please. A few words on mesdopetam, which we have partnered with together with Ipsen. Can you shift the slide to the further one more slide, Gonzalo? There. This is a drug which we have discovered using our ISP system. It is a compound which acts in the exact pathways which generate the involuntary movements in Parkinson disease and levodopa-induced dyskinesias, so-called PD-LIDs. This affects about 30% of all patients, and there are very few treatment options today. So there's a great unmet need. There is no treatment registered in Europe. There is a registered compound in the US, an old molecule which has some drawbacks in terms of side effects, which we don't see with mesdopetam. So we have a competitive advantage in that sense. This is a molecule that also displays antipsychotic-like properties in models of Parkinson disease. So we believe that PDP could be a secondary indication for this compound. PDP or psychosis in Parkinson disease is quite common. Around 35% of all patients experience this symptom, and there are very few treatment options which are tolerable to Parkinson patients. As a third option, there is also tardive dyskinesia, which is a neurological syndrome inflicted in people living with psychosis by the treatment. And this is also dependent on an excess of dopamine D3 receptors in certain areas of the brain. And since mesdopetam inhibits dopamine D3 receptors, we believe that mesdopetam could be an alternative treatment for tardive dyskinesia. And this is a quite large market as well, both in terms of patients and the pricing of current treatments, which are based on old technologies, is very, very premium. There are prices around $60,000 to $70,000 per year for a treatment for TD today. Next, please. I just wanted to inform everyone about the fact that we have a Capital Markets Day coming up on March 22, and we like to invite anybody who wants to come and listen to our growth strategy for the coming years. Gonzalo, over to you.
Thank you very much, Nicholas, for this nice presentation. And now we have a few minutes for a Q&A session. And I would like to start asking you about the pirepemat phase 2B trial for treating falls that you will start soon. I was wondering because you showed the presentation now that you will also target several secondary endpoints, and one of them is cognitive function. And my question is, would a positive result in the secondary endpoint for cognitive function be enough for transitioning to a phase 3, or you would have to run another phase 2B trial for cognition?
As always, it depends on the magnitude of the effect. This is a 3-month study. Usually, cognitive function is studied in longer trials. However, we saw a quite substantial or a quite strong signal of cognitive improvement in the phase 2A, which was only a 1-month trial. So we believe that could be a possible outcome of the phase 2B. Now it's a secondary. It's hard to build a phase 3 program on a secondary, but given the strong link between cognitive function and improvement in falls, we think that the signal, and based on our modeling, we think that the signal that we can pick up in falls will be the stronger one in this study. However, correlated with improvements in cognitive function.
Okay, interesting. Thank you. And my second question is around mesdopetam and the deal that you have done, the successful deal with Ipsen. And yes. I was wondering if you could give us some words on how the deal was structured and especially how this deal would affect follow-up indications, for example, Parkinson's disease, psychosis, and tardive dyskinesia.
Of course, we are prohibited to discuss the details of the deal further beyond what we have published already. This is a $363 million deal. It is not a very backloaded deal. It is evenly distributed over the development process. We have options for additional indications, such as the ones I've indicated here in the presentation today, going forward. And we have double-digit royalties coming at the end of the, starting with the first sale, basically. And of course, a few sales milestones, as these deals are usually structured. So it's not a very different deal from what you usually see in the industry.
Okay, thank you very much. And my following question is about the COVID-19 situation. Have you had any impact in patient recruitment in the trials that you're running now? And especially, what would you do if a new wave would come in the following year? Hopefully it doesn't happen, but if it happens, how would this affect the recruitment of the new phase 2B trial for pirepemat?
That's the, I hate to say it, $1,000,000 question. We see a drop in the spread of COVID in Europe right now. We also see a drop in the US. For the ongoing study, mesdopetam trial, we have seen impacts of COVID during the late fall and the winter, last year and this year, with the Omicron, the occurrence of Omicron. We are doing what everybody else is doing, mitigating this by expanding more sites and in regions where there are less infections. So we, along with everybody else doing clinical trials, have to manage this as we go along. Our guidance currently is that we will have fully recruited the study in May, end of May, the mesdopetam trial. However, we will come back with further guidance should that change. We are targeting 140 patients-ish. We can expand that if we find that necessary or want to do that. There are different reasons to do that. And expand the number of sites is our primary objective to be able to conclude within the time frame we have given guidance on.
Thank you very much.
Sorry, but with pirepemat, we have the same situation there. We probably should be happy that we didn't start earlier last fall with the study because of the COVID situation. We have seen colleagues in the specific Parkinson field who have not started studies at all, or have postponed studies, or have ended them early. So we've been lucky during this quite tough period.
Okay, thank you very much. And one last question on my side. With the situation you have now in terms of funding, what are your current priorities?
The priority right now is to start and get going with the recruitment in the pirepemat study. We expect 18 months for recruitment on that. Despite that, conclude the mesdopetam trial and then also bring additional compounds to phase 1 within our portfolio. And this will all be done within the current cash position.
Great. Thank you very much, Nicholas Waters, for this presentation. And see you soon.
Thank you. Thank you very much, everybody.
Hi, and welcome back to our next presentation. My name is Jacob Lemke, Healthcare Equity Research Analyst here at ABG. Our next company presenting is Boule Diagnostics, and I have the pleasure to welcome their CEO, Jesper Söderqvist. So please go ahead, Jesper.
Thank you very much, Jacob, and good morning, everyone. Pleasure to be here today to talk about Boule Diagnostics and our accomplishments last year, and a little bit how we see the market developing in the years to come. So Boule Diagnostics is a niche player providing the decentralized blood diagnostics globally. It allows physicians to get immediate test results without the need to wait for central laboratory test results. Blood diagnostics in general is a very cost-effective, essential tool to diagnose, monitor diseases and treatments, as well as used in health checkups to check how people are doing. We sell instruments and consumables in more than 100 countries through a large global and loyal distributor network. We have built strong brands with high quality, reliable systems. And a value driver for Boule is the business model where we place instruments that thereafter use consumables for many years. We also have a white label sales of consumables that we to other hematology providers that we refer to as our OEM business. Thanks to our large installed base of almost 29,000 instruments and our OEM business, we have a very large portion of recurring revenue. And in a normal year, that's more than 60% of the recurring revenue of our revenue. However, when the pandemic hit about 2 years ago, a lot of testing stopped at the smaller physician office lab and healthcare centers. But what we have seen now the last year is that the market is really recovering, and we ended last year with record sales. If we now look at the market, there are of course some uncertainties related to both the recovery of the pandemic, but also to the recent war in Ukraine. But if we go back and look here at this graph, we can see that our stable business model is really generating a lot of growth in a normal environment. As we place instruments, which may vary quarter to quarter, we saw before the pandemic that we had a stable growth of our consumable sales. Last year, we saw a recovery, and we had 3 quarters with good growth. And we ended last year with record sales, 140 million in a single quarter. And the consumables are now at the level as before the pre-pandemic. We're up 47% versus 2020, and we grow by 23% versus the third quarter last year. And we can see now that the instruments and sales are increasing globally. A lot of the growth last year was driven by our strong sales in US, driven by our OEM business. But we have also experienced a lot of disturbances in the supply chain, which has resulted in a lot of additional work and expenses, which burden our profitability. But I must say that, despite that, we have managed very well the last 2 years to drive the strategic agenda and continue to develop the company. And I will come back to that a little bit, what we're doing long term to support a stable and strong growth. So if we look now how we ended last year, we did our best quarter ever. Net sales were up 50%. And for the first time in the last 2 years since the pandemic started, we saw growth in all product lines and in all regions at the same time. We are delivering a gross margin which is below our ambition, but that is impacted by region and product mix, but mainly by the supply chain disturbances which pressure gross margins, as we have a lot of extra costs to source components, and we also have need to do a lot of redesign to get components that we see shortages of. We have also managed to continue to invest in a new product platform, and I'll come back to that. In the last quarter last year, we invested 15 million crowns in the new platform. Our operating cash flow was 11.8 million, and our EBIT margin ended at 9.9%. So if you now look at this, what's happened in the market is that as the vaccines are rolled out and the pandemic is easing up and there are less restrictions in most parts of the world, we can see that there is a recovery ongoing everywhere. The OEM business continued to show strong growth, and that is what's driving our revenue growth in the US. In Asia, growth is mainly driven by instrument sales to India, whereas many of the other Southeast Asian countries are still under severe restrictions. So there we don't see a growth yet, and that's we will benefit from the coming year. In Eastern Europe, we saw good growth, but that, of course, I'll come back and comment also a little bit how we see the situation now in Eastern Europe related to the war in Ukraine. Also, what we did last year was that we invested in local presence in the Middle East and Africa, and that has really started to show here, and we saw good growth in Middle East and Africa in the end of last year. So overall, growth and a positive development and a sign of a clear recovery in the market. As I said, the profitability is impacted by the supply chain issues. If we compare end of last year to this year, to the year before, we had a write-down of 40 million related to some technology assets. But the operating result 2020 was minus 1.6 million. So we improved the profitability end of last year with 15 million. And ended at 13.8 million in the fourth quarter, and an EBIT margin of 9.9%. So things are really moving in the right direction when it comes to our performance in the market, and I think we have done well in managing these issues we have had related to the supply chain issues. We are investing also a lot at the same time in our long-term future. The development of the new platform is one important strategic project that we are progressing with very well. If you look at our liquidity position, we ended last year with 89 million in available liquidity. I think that was very well. So despite that we had a very large growth of sales, I think we managed the working capital very well. Overall, I would say that we have a strong financial position, and we can continue to drive our strategic agenda without worrying about our immediate cash flow, even if that is something that we follow very carefully. So what we did last year is that we entered the fourth quarter with a large order book. The challenge was really to build all the instruments and get all the consumables shipped to customers. I think we did very well. We didn't manage to convert all of the order book to revenue in the fourth quarter. But overall, I would say that we have managed the supply chain situation during all of 2021 very well. That is, of course, a continued risk. We don't see that the supply chain situation will improve rapidly, but we are expecting that it will improve during the coming year. However, now with the war in Ukraine, I think that will create a lot of uncertainty in general in the market. Another important project for us is to prepare for the new European regulatory framework. And I think there we have done very good progress in the last year. And an important milestone was in November, where we did a external audit of our QMS, our quality management system, and we passed with that without any observations. And then, of course, we work a lot on the first release on our new product platform. where we're now in an intense phase to prepare for clinical validation and prepare for introduction in production. Last year, we also did an update of our strategic agenda, and we have continued to execute on that. And we are very pleased with the progress so far. If we take a look a little bit at all of last year, so when we entered 2021, the pandemic was really at the peak, and but what we have seen during this last year is that we have seen a recovery of demand, and rather than worrying about order intake, we now need to manage the supply chain challenges. That has pressured our gross profit and also our EBIT, as we have had extra expenses, and that will partly continue during this year. We have also managed to expand our commercial organization. We have ramped up the production of a new OEM product to one of our OEM clients. And the major growth last year was really related to a long-term supply chain agreement that we signed in September 2020. And of course, we are in a good path to be ready when the new European regulatory framework comes into effect in May of this year. And I would say that overall, we have increased focus on innovation. We make progress, both with the new platform, which is both an instrument and consumables, but we also are developing a new connectivity solution, which will increase the value of this new system. In total, we invested 53 million in the new product development last year, and this is the biggest investment ever in Boule's history. We will have our AGM in May, and the board has proposed a dividend of 0.55 SEK per share to the AGM. So overall, we're not at the level full year as we were in 2019, but we see that we are having a business volume and activity which is similar to what it was before the pandemic. So looking ahead now, this year, if you look at the US market, we have seen strong performance, and we do have a positive outlook, in particular for our OEM business. As I said, in Asia, the Indian market has recovered, whereas many parts of Southeast Asia is still waiting for these restrictions. So we expect that when the rest of Asia opens up, that will help our growth this coming year. And then, of course, Eastern Europe is there's a big uncertainty now related to the Ukraine war and all the human tragedy that is happening there. So it's a little bit early for us to say exactly how that will impact our business and the world economy right now. Middle East and Africa, we have a positive view. And then thanks to our increased local presence, we are now in contact with many new distributors, and we're looking forward to start up business in many African countries where we're not present at all today, and where we think that we can have a strong market position, and we really have products very well fit for those markets. I think the clouds that we're looking out for is, like a few weeks ago, I would have said that it's only the supply chain and the logistics challenges. But of course, the war in Ukraine is something that we're tracking, very carefully now, trying to understand how that will affect our business going forward. So let's talk a little bit about the new platform that will support our long-term growth. This is a new platform that will be based on our own proprietary technology. The first release on this platform will be a cloud service that will be rolled out end of this year to select customers and targeting the current install base. The first instrument will be an advanced 5-part instrument, and we expect that to be launched in early 2023. And when we're entering this 5-part market, we will address a larger market that has higher growth than our current three-part market. And this platform will be used to update our entire product portfolio the next 2 to 5 years. So, which is very, very promising for our long-term outlook. So, going ahead, looking into this year, the strategic directions remain intact. And the key priorities now is to convert a large order book. We started this year very positively with a large order book and a very optimistic outlook. That has now been gloomed by the war in Ukraine. We're working with price adjustments to mitigate some of our increased cost of doing business. And we'll continue to manage the supply chain situation. Some of that will be related to the disturbances when it comes to component supply and logistics. But we also have some more planned work, like increasing the production capacity in the US production lines for our OEM business that is growing rapidly. We are making sure that we are ready for the new European regulatory framework and have all the products ready so that we can continue business as is. And then, of course, a lot of focus is now on the industrialization of a new product platform. And we will continue to strengthen Boule based on our updated strategy. And we want to leverage our increased local presence. And very importantly, we see that we can add value to our distributors and also to end users by providing more training services. And that is done under something we call the Boule Academy, which we successfully have rolled out the last few years, and we will increase the activity going forward. And that is very well received by our distributors. So, in summary, we have seen now a recovery after the pandemic. We are executing our strategy. We see challenges with the supply chain in general. And we opened this year with a very, very optimistic outlook and a strong order book. However, now we are looking ahead to a lot of uncertainty, mainly related to our business in Eastern Europe due to the war in Ukraine, and we will follow that very closely. Despite some of these issues that we see in the market, I am convinced that there is a strong underlying growth for the type of diagnostics that we provide. So even if we will have some hardships here short term, I'm convinced that there's a long-term growth in the market that we're operating in, and Boule is very well positioned in that market. So we'll look forward to the coming years. Thank you very much.
Okay, thank you for your presentation, Jesper. If we start with the sort of question on more of the big picture, if we look at look back over the pandemic, I think that a lot of healthcare providers hasn't really invested in the non-critical or non-intensive care equipment during the pandemic. To what extent are you seeing sort of these underinvestments starting to catch up, and do you expect to see sort of increased demand for capital equipment going into 2022?
I mean, in general, I think you're right that there will be increased investments in capital equipment, also to non-critical care. The type of diagnostic that we are doing is not, what we lost was really the health checkups, and of course that is not that they will do 2 health checkups. They didn't do 1 last year. But what we have seen now over the last 3 quarters is that we have seen a very good order intake. And our order book has never been as big as it is today. If you take out some of these other factors that now is maybe shaking up the market, I think that we are we have seen clear signs of recovery, and we have seen clear growth in all of the markets where we are in. So, yeah, if in a normal year everything would be very bright.
Okay. And if we move on to your OEM business, as you mentioned, it has been, I would say very strong during the year. I think it grew by above 100% here in Q4. And I think sort of in general, it's been quite or a bit overlooked by investors. So maybe you can just sort of go into a bit more detail on sort of what customers you're addressing and why you are growing so much there.
So if you look at Boule, I think we are one of few companies that have both development and production of all components in the system, the instruments and the consumables, the reagents, as well as the blood control and the calibrators. So I think we are a very attractive partner to other hematology providers. And so I think that's why these other those OEM clients turn to us. They have they know that we have good quality. They know that we have consistently delivered high quality during many years, and they like the infrastructure we had with our production facilities. We have shown that we can manage to ramp up when they see business. I think the very positive thing is that many of these customers we had worked with for 10 or 20 years, and these are really long-term agreements. I think the growth you saw last year was related to that supply agreement that we signed the year before, and where the initial term is 10 years and there's another option for another 10 years. So it's like a 20-year business commitment between us and our OEM client. And of course that so that's I would say that's a very strong performance from our side, has created that trust in us as an organization to deliver. And several of our OEM clients are renewing their product portfolio. So I think that we can continue to see strong growth from those OEM clients.
Okay. And if we look at the Q4 here that you reported recently, I mean, it was a very strong quarter in general with the record sales, but the gross margin was a bit weaker than at least I had expected, and partially due to business mix and as well the supply chains complexities. But in conjunction with the report, you also mentioned that you are going to increase prices. Sort of, where are you on that, and what sort of expectations do you have for margins in this year?
Yeah, so we have done price adjustments in some markets already last year, and we did increased our price list in start of this year, and we're planning to increase prices to customers during this year, as as soon and as fast as our contractual agreements allow us to do that. However, what we see is that the gross margin is really pressured by very high component prices. We see also that transport costs, both inbound and outbound, are they are really increasing very rapidly. And what has happened the last 10 days has also, of course, it will not make the world better in that respect. So I think it remains to see in a little bit how that will affect our business. But we are trying to mitigate as much as we can.
Okay. I think we have time for a brief final question, and I think it would be interesting to hear your view on sort of quite recent announcement of Siemens that they are going to invest more in the hematology field. So if you can say what you think about that and what it means for Boule Diagnostics.
Yeah, I don't think it will have a direct effect on us. I listened also to the Siemens Capital Markets Day. I think it's interesting because I think they point out that the decentralized market as an attractive market. And my belief is that we are well positioned in that market, and that bigger companies as Siemens also see that this is an attractive market is probably a good sign. I think where they come from these large, very expensive equipment in the central laboratories, I think it will take them a long time before they have the type of both products that is cost effective, and also that they have I don't think they ever have a sales and service network like we have. We have many loyal distributors that had worked with us for many years in these emerging economies where this market is probably, will grow fastest the coming years. I think it's interesting that they are looking at this market, but I'm not think that they will directly compete with us.
Okay, I think that was all the time we had for questions. I would like to thank everyone for listening in, and thank you as well.
Thank you very much.
Hello and welcome back to ABG Sundal Collier's Investor Days. My name is Olof Cederholm. I cover the wind companies, wind developers at ABG, and I have the pleasure to introduce Per-Erik Eriksson, CEO of Arise. Very welcome, Per-Erik, and we'll do a presentation for about 20 minutes and then we'll do some Q&A. But with that, over to you.
Thank you, Olof. Then I propose that we start with slide number 2. The next one, please. Yes, thank you. Arise was founded in 2007. We are a quite small company. I think we are actually 33 employees today. We have a product portfolio of around 2,600 megawatts. I will come back to that later on. We also have own wind power assets of 139 megawatts. We have under management 1,400 megawatts, including our own portfolio of 139. So the major part is external customers and asset management. I think I will come back on that as well. As a company, we have never had as much under construction as we have at this moment. We have some 473 megawatts in 2 larger projects, construction works ongoing as we speak. With that, I think we could flip slide, Olof. Thank you. Looking at the numbers for 2021, you can see in the 12 months numbers that we had some EBITDA on 157 million SEK, and we had profit loss after tax at 57 million SEK, which was a fairly good historical result for Arise as a company looking back in the history. One thing to mention is that we had a quite good development in our own production in the last quarters due to the fact that we had quite increasing in prices in the power market. And as you can see in the bottom to the right, that we had some average price in Q4 on 812 SEK per megawatt hour, which is a record level. I think we could move on. Looking at the product portfolio, you can see 2 categories here. One is the late stage development projects, and then you have in the bottom you have the early stage development projects. And starting with what we have in the closer in the pipeline, closer to be realized, you can see if you start with Kölvallen project, 42 turbines, close to 300 megawatts. Quite good project in terms of production. In that case, we are in a late stage tender process on all the project contracts, including turbines, civil contracts, grid contracts. We also have a grid connection contract already signed. So that is quite far in development, and we have an ambition to have that sold during late Q2 this year. We also have another the smaller project in the top, LEBA project, 5 turbines, 30 megawatts. We are in same process there, late stage tender process on all contracts. In that case, we aim for building that on our own balance sheet in our book, and we are aiming for investment decision mid-year this year to 2022. We also have could mention Fasikan project. We have a permit in legal force. We are just awaiting the grid concession approval from the Energy Inspectorate. We hope to have that. We had expected to have it before year end, but we at least hope to have it well ahead of summer this year. We also have Finwire.tv, which is in a late appeal process, you could say, in the permitting process, and that's also something we have some expectations to have at least some indications on the permit this year. We also have the Transtema project in Scotland, a smaller project, but quite good production-wise, and also in terms of where we are in the market. We have filed the permit and also filed the grid connection application, so that's a bit in a waiting mode, you could say. But we expect to have some feedback on that during next year, at least some indications on where we are. looking at the early stage development, I could mention HT Skogar. We signed an agreement with HT Skogar just before summer last year, and that is a quite large scale potential for us, some 1,500 megawatt we have estimated as a potential on that. We have started up the process we have dialogue with the concerned municipalities, and we are starting up some inventories, etc. as well during spring, early summer this year. So that's ongoing. With that said, I think we move to the next slide. This slide is showing in the staple diagram, you can see our own production. If we start with that, we started up as an IPP, Arise, SAD founded in 2007 and listed in 2010. And during 2009 to let's say 11, we started up. We built up our own assets that we own today, some 139 megawatts. 10 wind farms, 8 of them are located in price area 4 and 2 are located in price area 3. So it's in a good spot in the Swedish in the Nordic system price area, you could say. In 2013 we also added Jädraås project to the portfolio. That was a partnership, a joint venture with another investor. We had a 50% share. That was late. We divested that project later on, 2018-19, and now we are back on where we started, basically the 139 megawatts. As we experienced, we had a quite tough start for the company. We had we did a lot of realized a lot of projects, and we had quite much debt, and that combined with low revenues was a bad combo. So in 2013-14 we changed the strategy to also move into the developing business, and as you can see on the green line and the green diagram that we had a quite good development in our development business. So until today we have divested some 1 gigawatt or 1,000 megawatts, and we have constructed even more, 1.2 gigawatts, and that actually represents a quite material value of some 1.5 billion euros. So we are quite proud about that, to be able to realize that with a quite small organization. I think we could flip again. This slide shows also our asset management operations, which has basically followed the development business, but we also do some asset management as a standalone business. So until now we have some 1.4 gigawatt or 1,400 megawatts that we under management. We have a number of quite reputable clients or investors, as you can see, Allianz, we had Capital Partners, also global investors, BlackRock, and a number of different financial counterparties, and also utilities, as you can see on Forte. With that, I think we move. Our portfolio expansion. We are in dialogue in Norway with a number of landowners and municipalities, and evaluating the opportunities in Norway. We also signed some agreement that has been communicated to the market. So we are working actively in Norway. Obviously, we have a bit of a difficult political situation, but we believe also that politics might change over time. So we see opportunities in Norway. We did communicate a new strategy last year during spring, and the keyword was basically diversification in terms of geographies, but also in terms of technology. in that case, mainly solar, but there are other things we are looking at as well. And that has resulted in that, as a consequence, we are working now in the UK. We have a large-scale solar projects we are working on as we speak. We are investigating the grid connection, but also preparing for a permit process. So that is in progress, you could say. In Poland, we have a bit different approach. We are looking into different projects, development projects in different stages to find. We have a partner working together with us, and we are looking into possible project acquisitions in Poland, and we have some concrete ongoing discussions in Poland as well. I could also mention in the UK, I think we have mentioned Transtema, but also we have some on wind as well. We are also looking at, we have started up some development projects another development project up in Scotland as well. It could be mentioned as part of the working in different geographies. I think we could move on. Power markets has been a bit special. We have never seen anything like this before, I would say, in Europe. This slide is from our Q4 presentation, so I think there are something has changed even more after this. But looking and starting up to the left, you can see the spot price that really exploded during Q3, Q4 last year, and we are still on that extremely high level due to the ongoing war in Ukraine with Russia, and also that the limited gas supply to Europe as this moment as a consequence of that. So we have really seen that gas prices been driving the prices across Europe, and that had a great impact, as you have all seen in the Nordics as well. On top of that, we have the emission trading scheme with CO2 been trading on record level as well, which further on has pushed prices up. And we had also in the Nordics, where we had a bit of a deficit in the hydrological balance as well, which also pushed prices to the extremes we have seen during this Q3, Q4, and also during this winter. We have also seen that the system price and SE4 has come closer together, as you can see the interconnectors out of southern Norway also pushed up the system price. But we also have seen that SE2 and SE1 has been lagging, and very much due to the fact that there are some bottlenecks in the transmission system. But on the other hand, the TSO has announced some capex program to take away to do investments to improve the current bottlenecks. We also see in SE1 and SE2 in a bit longer perspective that there is quite advanced plans on the quite heavily increased electricity consumption in SE1 and SE2. You have the green steel, you have the battery factories, we have the hydrogen initiatives as well. So we expect to see quite different fundamental situation up north in Sweden in the coming years. Here it says that the German price is somewhat lower, but that has changed after this slide was prepared. So now we see German prices on record levels again. And you can also see on the forward prices that they have increased quite much, especially SE4 versus in this case I think it was the system price, right? Yeah. With that said, I think we change slide again. This is showing the history of Arise in terms of price hedges. To the left, you can see from 2009, You can see the blue staples, or the dark blue is the electricity price, and the light blue is the certificates prices, and you can see the green dots, which basically is our realized price at the rise. And you can see until 2000. Yeah, let's say 18, something like that. We had a quite good hedge prices in that market, meaning that basically that we were early movers on hedging, and during decreasing prices, we could gain from those hedges. Now reality catched up a bit in the later years, as you can see. And looking at where we are right now, the hedges we have in place are quite high, but they are still quite much lower versus the market, the market price you see on the screen. And there are some reasons behind this. One thing is obviously the market itself, but I would say that you also see an extreme market also means that you have extreme differences during a day between hours. So you can have up to 100 or even more than 100 euros per megawatt hours in difference between 2 hours. And this means that the realized price on wind power will be quite much lower versus what you see as an average price on the screen. So we have seen up to 25% discount on our produced realized price on spot versus what you see as an average on the screen or in the market. On the other hand, even though we have this cannibalization, you can also see that we have realized prices on record levels we have never seen. In Q4, for instance, you can see 800 SEK per megawatt hour, which is a record level for us. So you could say that obviously we are gaining from higher market prices, even though we have we are affected by some cannibalization more than normally in an extreme market. You can also see up to the right our production in 2021. We had a quite low production, some 280 gigawatt hours versus our normal production, which is some 343 as an average over all the years. And that is very much explained to the low winds in 2021. I think we had we were 18% lower than normal. We see a bit different situation so far this year, so that can vary quite much between different years. Between 80% up to 120%. We also have for our own production portfolio a hedging strategy. We have more flexibility now as we have less debt than before, and we are less dependent on requirements from banks to hedge, etc. We are in full control of our hedging, which means that we have, for instance, in 2022, where we have hedged up to 40% at a level 80 euros plus. And we also have hedged quite much also by now in 2023 to a fairly high level as well, which secures a good cash flow, I would say. With that, I think we change again. The projects we have under construction. We have the 473 megawatts Skaftåsen and Ranasjö and Sånsjöhöjden. We have some delays in Skaftåsen, but we have some protection as well from the contracts, so we don't see any. We see some limited impact from the delay. However, we had also some increase of grid connection, which has some impact, and I think that's already being communicated to the market. Ranasjö Sånsjö is in early phase. We started up the civil works this year, and we're expecting to have a COD or completion in Q1 24. Next slide, please. Key activities for 22. We have established a green financing net framework. I will come back to that. I mentioned the investment decision in Lebo and also Kölvallen. The strategy regarding our own production to form it out remains. However, we have taken a decision to benefit from strong underlying cash flow in the short term. So that we'll see what the decision will be by the end of this year. Fasikan, I have already mentioned. I think I mentioned also the pipeline in the UK and Poland. I think we move on. Yeah, the new strategy. Diversification, you can see to the left in the UK, solar and wind in the UK as well, and also the initiatives we have ongoing in Poland. Another thing to mention is that we are looking into or we are planning for preparing for to be a bit more flexible when we sell projects, to also sell and to have products sold at cost, meaning that we would benefit from yield compression by doing that. We could, if we get, it means basically that we take some construction, we take more risk, we take construction risk. On the other hand, we see that there is a value in terms of IRR and yield compression, which means that we potentially could have more profits from our project sales. Obviously, that would also mean some increased capital allocation during construction works, etc. But where we are right now, as you can see to the right, we have a quite good story in terms of how we decreased our debt over time. And as you can see, looking at 2021, we are at some 400 million SEK, and after that we have realized when the convertible bond expired, where we are around 300 million euros, which is a quite low debt. So basically we used the income, the revenues we got from selling projects to decrease our debt. So we are in a very good financial situation right now, which means that we think that could be that should be a strong position to attract capital as well, to continue to accelerate our pipeline. I think we could move on. Yeah, I could mention this. This is the green financing framework. We have realized this now, and we hope that this will attract capital. Obviously, we could have the next one as well. Here we have a stamp from we have a second party opinion provided by Serious Shades of Green, and we have this project has been certified as Cicero Dark Green. Next one, please. We had some changes in the organization. We had I took over as CEO October last year after Daniel Johansson, and we also have a new CFO from yesterday, actually, Marcus Larsson. He also was the interim CFO since January. I'm happy to announce that Marcus joined the company as well. Linus will leave during spring, and so he's in parallel working with Marcus at the moment. We also have Hans Karlsson as a new CEO from 1st of March. He has a long experience from Siemens Gamesa for 25 years, so he has a very strong experience from this business and this sector. Next one, please. This is the largest shareholders in the company. I could mention that we have Johan Claesson with family and his corporate, his company. They have some 25, I think, all in all up to 29%, something like that. We have Alto Cumulus, the third AP fund, and also Länsförsäkringar. They are the major shareholders, and then we have a number of smaller shareholders as well. But there are a few larger ones and private and also institutional shareholders in this company. with that, I would like to thank for attention. I think that was the last slide. Thank you.
Yes, thank you very much, Per-Erik. We're slightly short on time, but it's you clearly have a good late stage portfolio, and you have some in the early stage that will also convert fairly soon. But just one question is on the UK and the solar projects, and also Poland. Do you have a reasonable timeline to share with us when you think we could see tangible projects coming in to the late stage portfolio from that?
It's a bit difficult to say, but I would say that if we can manage what I expect us to manage right now in terms of grid connection in this large project in the UK, I believe it's a fair estimate is that we should have something, that we should have a grid connection in 26. So it will take some time. On the other hand, we also have a permit process in front of us, so that would match quite well. It's quite the permit processes in the UK are quite heavy to manage, but on the other hand, it's a quite high probability that you will actually get the permit if you tick all the boxes. And in Poland, we are looking in. There are quite big variation of different projects we are looking into. Some could be realized quite soon in the late stage, and other ones will take a longer time. So it's difficult to share something right now, but I'm hopeful that we will have something realized in the coming years, at least in Poland as well. And we expect to have some agreement signed this year.
Excellent. Thank you very much, Per-Erik. Thank you for your time, and it was a very interesting presentation. With that, we end the Arise presentation and have a few minutes until our next one starts. Thank you.
Thank you.
Hi and welcome back to ABG Investor Days. My name is Simon Johnson. I'm equity analyst here at ABG, covering small cap tech and gaming. Today I have the pleasure of hosting the COO, Katan, from Irisity. He will give you a presentation of the company, and after which I will host a short Q&A. And with that said, Itzik, the floor is yours.
Thank you, Simon. Hello and good morning, everyone. Thanks for joining. As per the introduction, my name is Katan. I'm the Chief Operating Officer of Irisity. Irisity is a Swedish publicly listed company in the Stockholm Nasdaq market. I'll start by giving you... Sorry. Now you can... Oh, next slide, please. I'll start by giving you some background about Irisity. So Irisity is a global AI video analytics software and SaaS provider. As I mentioned, headquartered in Gothenburg in Sweden, and today has offices in 5 additional countries. When we say AI video analytics company, basically it means that the company develops software that analyzes video that originates from surveillance cameras, and basically enables the entire automation of understanding what goes on in the video. That means detecting events in real time through the software without any human intervention. Also analyzing the video retroactively in order to find certain events that have occurred in the past. Think of it kind of as a Google search engine for surveillance footage for mass amounts of video, basically saving the time from human operators to manually sit in front of screens and manually review hours of video. So all that automation is being presented through the software that Irisity provides. We basically deliver this artificial intelligence layer that comes into either existing surveillance networks or networks that are being set up. And we are focused purely on the development of that and development and delivery of that software. So basically the brains of any surveillance system would be the AI software that Irisity provides. And one of the core emphasis in what we do is to maintain and protect personal privacy. So to make sure that through the use of our software, there is no abuse in penetrating personal information about people who may be traveling through a scene that may be monitored by surveillance cameras. Naturally, we follow GDPR regulations in Europe and any other applicable laws and regulation in that respect. Next slide, please. So before I jump into exactly what Irisity does, I think the timing of this call that we have now is really prime time, because in Q4, just less than 6 months ago, a really transformative event occurred in the life of Irisity, and that is an acquisition of a parallel company in the space, a company called Agent Video Intelligence, or in short, Agent VI. So Agent VI is one of the pioneers in the AI video analytics space, a company that started back in 2003. I served as the CEO of Agent VI, headquartered in Israel, for the past 13 years. And last year, we've decided to positively comply with a proposal of acquisition by Irisity, and basically the two companies merged. So we now form a single entity that is, again, Irisity, that is publicly listed in the Nasdaq market. And each company basically, or the two companies, complement each other with a variety of capabilities and skills. Irisity brought to the table very strong capabilities in development of AI, artificial intelligence capabilities, with strong sales presence in the Nordic markets. Obviously, it's a publicly listed company. It presents a lot of benefits for the joint entity. And Agent VI brought to the table sales presence in a lot of different other markets, primarily the Americas and Southeast Asia, Singapore region. We had or still have a platform that is cloud ready to be provided as software as a service. So basically the combination of our platform together with the algorithmic capabilities or the AI capabilities that Irisity develops form a very comprehensive and strong product that can be taken out to the market. And from Agent VI's perspective, our delivery or our product is a pure software with very high margins. Irisity still has some residual business model, let's call it, or legacy business model, where they do deliver certain hardware components, but the companies now, through the merged entity, are focusing on delivering pure software solutions with high margin. Obviously, this is some sort of a transition process that's going to take a few extra quarters until completion, but the focus is primarily on delivering software with very high margins. So Irisity started in 2006. Agent VI started in 2003. Each company had strong capabilities and presence in its respective markets, but the combined entity now is really the most significant and largest in the field of AI video analytics software in the market. And Q4 of 2021 was really the first quarter where the merger took effect, and the combined or the merged financial results were reported to the market, and close to $4 million in revenue of the combined entity. And generally, I would say that it was also a profitable quarter. Unfortunately, Irisity still reports its financials in the Swedish K3 audit system, which is quite unique. So certain depreciation elements come into the financials, so you don't see the profit. But if you report that based on IFRS, then there's about $1 million in profit for the quarter for the merged entity. As a side note, I'll mention that Irisity does plan to switch to IFRS in hopefully by summer. We'll switch our auditing method from K3 to IFRS. Next slide, please. Snapshot on our post-merger status. So as mentioned, headquarters in Gothenburg, an additional 5 offices in Mexico, in the USA, in Israel, of course, in Singapore and the United Arab Emirates. About 100 employees, 50 of which developers, and 24 people in the sales and marketing group in total. So these are direct salespeople or sales force of about 15, and additional sales engineers and marketing people. Next slide, please. The group management team is actually comprised of a mix of managers from Irisity and managers from Agent VI post-merger. So jointly, we formed the group management team. Marcus Backlund, who is the CEO of Irisity, was the CEO prior to the merger, of course, and is the CEO also after the merger. He's Swedish, based in Sweden. I joined the merged entity from my position as CEO of Agent VI, and now serve as the COO of the entity. AJ Frazier in the US serves as our Chief Revenue Officer, and additional senior managers from both companies serve in a variety of roles. And we are in the process of recruiting a CFO, a new CFO. We did have a CFO until recently, and we are now looking to fill that position with a CFO that will take us to our next growth chapter. Next slide, please. So let's talk a little bit about the product and what the company develops and delivers. So I mentioned that Agent VI brought to the table a platform. So that platform is called Innovi. And Innovi is really an all-in-one video analytics platform. So think of it as, again, the brains that you would want to put in a surveillance system to basically automate the entire understanding of what happens in a surveillance network. So it could be a surveillance network of a city that may have tens of thousands of cameras in a city, or it could be a facility with a few hundreds of cameras like an airport, or it could be a monitoring or security company that monitors sites for its customers and may have hundreds of cameras or thousands of cameras deployed across a very broad region in different cities, sometimes even in different countries. And there is a need to somehow understand what happens in the video. Is there a security event emerging? Is there a safety hazard that needs to be taken care of? And obviously, we do not want to have a human operator sitting in front of hundreds of screens and trying to understand what goes on in the video. So Innovi, as the platform, does it for you. And Innovi has 4 main capabilities, starting from the left side of the slide. The first one is proactive security. So this is really the ability to understand in real time what happens in the video. Is there an event of, for example, perimeter intrusion? Is someone jumping over a fence into a secure facility? Is there a formation of crowd in a place that shouldn't be? Has someone stolen some valuable object from the scene, or has left something in the scene? All of these events and many other different types of events can be detected in real time by this software. And once detected, it pops up an alert to the security operator, and then he can actually respond to that event and deploy security personnel or respond in whatever other way necessary. And again, all that is done automatically. The human operator does not need to sit in front of the screens and view the video. Basically, the AI software does that work for him and only prompts an alert when something happens. The second element of the software is for investigation. So think of masses of video that's being recorded for a very long period of time, and then an event occurred and you need to go back into the video and start to investigate where that event started and what is its results. For example, if there was a car bomb that blew up or a robbery in some store and you want to trace back exactly to see where that car arrived to the scene, who drove it, did he have any additional accomplices in the event? So all that can be analyzed through basically a search engine that we deliver within Innovi. And the search is being conducted instantaneously. So any search query can be fed into our search user interface, and all the results can be picked up from the video in a matter of seconds or maximum in a matter of minutes. Another capability is for enforcement or protection of health and safety regulations. So obviously certain elements related to COVID, such as enforcement of social distancing, so understanding when there is overcrowding or people standing too close to each other, but also other types of health and safety incidents, such detection of people falling. This can be used in public environments, but it can also be used in elderly care facilities where you want to detect if people have been fallen and require assistance. And also trespassing of rail, where people basically jump or happen to cross a rail where they shouldn't. And the last element is what we call improved insights. This is mainly a statistical tool that allows the operator to analyze traffic trends in the facility based on counting of numbers of people and certain motion trends of people or vehicle. It could be in a facility, and it could be also in an area as large as a city, and enables both optimization of workforce, for example, in retail stores, that you want to analyze number of shoppers in different branches, different times of day. You can then optimize your workforce accordingly, or even do some planning when you're talking about a citywide management of traffic or certain public events. Next slide, please. So I mentioned some of the industries that we work with. Basically, our software is applicable to any type of industry or any type of facility that uses surveillance cameras, whether it's smart cities or remote monitoring services, transportation, critical infrastructure, education, construction, health, industrial, and you name it. And when people sometimes think about surveillance or companies that deal with surveillance as something that may have a bit of a negative ring to it, actually, Irisity brings to the table something very unique because surveillance cameras are out there regardless of what Irisity does. We basically enable removing the human element out of the equation, basically removing the potential of abuse by human operators, because we introduce a software that basically analyzes all the video without requiring a human operator to sit and observe. And then we take out only the events that require attention, and those events are then presented to the operator for further viewing. And in addition, we also have certain capabilities to what we call anonymize the video, and that basically means to blur the faces of people that travel through the scene. So basically, that's what makes Irisity's solution both unique but also applicable to a variety of industries where there might be a little bit of a deterrence of usage of certain surveillance technologies on the one hand, but on the other hand, they're still quite necessary to maintain the security and safety of the people who visit the city or the facility. Next slide, please. So in terms of our go-to-market strategy, we have quite a diversified go-to-market strategy, which enables us to reach a very broad market. I'll go through that very briefly. So basically, we have three ways of going to market. One is selling in cooperation with what we call technology partners. So these are companies that deliver other values in the value chain of surveillance. This could be camera companies or companies that provide other types of software to eventually the same end users that we deliver to. And we work with them in order to identify certain markets or certain customers that we should pursue together. So it gives us a lot of exposure to a lot of projects and customers that otherwise we would not be able to reach on our own with our own sales force. The other way that we work is selling through channel networks. So we have multiple systems integrators and distributors in different geographical markets. And these are typically companies that have their hands on the actual deployment or installation of a surveillance network. And they approach us when they need solutions like ours. And obviously, we work through them in order to bring our message to the market and be able to reach a lot more customers. And since we do deliver SaaS to certain customers, again, SaaS is still not the prominent part of our business model. We are in that point of transition, but we do have multiple SaaS customers that we sell direct to, mostly security companies. These are companies that deliver security services to their customers, and they use our software to basically be able to monitor a lot more cameras automatically. So companies as large as Securitas and G4S, which are two of the largest security companies globally, are our customers. And we have a few dozen other customers that we sell to in that model. Next slide, please. A brief summary of our Q1 interim financial results. Again, this is the first quarter that we've reported as a joint entity, so we're very excited about that. So obviously growth across the board, both organic and as a result of the merger. As a result of the merger, the company reported more than triple revenue compared to the same quarter of last year. Increase also in our monthly recurring revenue, which is a very much area of focus for us as a company to do that transition, to have the majority of our revenue to eventually be from recurring revenue sources. We're still not there, but it is in the process of transition. And as you can see, gross margin, I would say largely due to the contribution of the agent VI piece of the business model, gross margin has been quite high. As I mentioned earlier, Irisity does have a bit of a legacy business model where they did sell some hardware, and we're slowly turning down that business model in favor of selling high margin software only. Next slide, please. A little bit about our growth strategy, really in a nutshell. So aside of making the merger work to increase our market share through a broader channel network, as I discussed before, part of our growth strategy actually relies on additional mergers and acquisitions in the space. The security or surveillance space globally is very fragmented, and there is a trend of consolidation. If you're following some of the stuff that are happening in the market, I think that the most significant one is you will note that Motorola Solutions from the US has been on a sequence of acquisitions as small as a few dozens of millions and as large as $1 billion per acquisition, and they've aggregated a lot of security companies in order to form a cluster of solutions that they can then deliver to their legacy customer base. And there are similar trends in the industry, but a lot of opportunities because historically, as I've been in the market for the past 13 years, there have been a lot of companies that have been, this market has been made up of multiple companies, and now they're seeking to consolidate. So Irisity, also with its ability to deliver a publicly listed platform and a core of solutions and a track record of almost 20 years combined with Agent VI, really is a focal point that can aggregate around it additional technologies in order to gradually increase its market share presence and the breadth of its solutions. I think this is the last slide that I wanted to cover today. Maybe let's jump to the next just to make sure. Next slide. Yeah, this is a deep dive into the Irisity product portfolio. I think we can avoid that, so we can go back to the previous slide. Just before I hand it over to the Q&A, I'll just mention that Q4 was really the transformative pivotal point in the life of both Irisity and Agent VI, as you saw from the financial results. Unfortunately for all of us, the markets then blew up, both as a result of the inflation concerns as well as the events or the war currently in Europe. But if we look forward, hopefully 3 to 6 months into the future, when all the impact of these events on the markets subdue a bit, then it really is an opportunity to look at the growth that Irisity and Agent VI combined are starting to bring to the market. So eventually our stock has also taken a hit as a result of what goes on in the markets. But this could be a really prime time to capture a company right in its pivotal point, right ahead of its travel towards additional growth. I'll open for Q&A now.
Thanks, Nitik, for the presentation. And I would like to start off with the merger, of course, which is very interesting. And I was thinking, will you merge the offerings, or will the two companies sort of continue as different entities with different product packages, etc.?
So good question. So as I mentioned in the merger slide, basically what Irisity brings is a very broad set of detection capabilities or abilities to analyze video. And Agent VI brought a platform that is very much cloud ready or SaaS ready, so something that can be deployed in a very wide scale. So the intention, and the intention is already happening, is that the Agent VI platform in Novi will be the platform that the companies would sell, and the Irisity detection capabilities will be plugged into that platform as some part of what the platform can deliver. So the companies are already in a process to merge our development roadmap and our product to basically sell one product, be busy with developing one platform and dealing with selling one platform. Obviously, again, this is a process of transition since we have to maintain certain legacy customers, but hopefully by the end of this year, we'll see the company fully focused on just the one platform.
So you're basically merging a very good platform in Agent VI with a superior product in Irisity to one product.
Correct.
Yeah.
Correct.
Interesting. And also, I was wondering about if you could share some details about the G4S contracts. Would you say that the rollout is going as expected, or has it been moving a bit slower than you expected?
Well, both for G4S and Securitas, so since they work in kind of similar models, these are two companies that obviously they are the largest security companies globally. Both of them, whether it's stated or unstated, but they kind of made a conscious decision to be more focused on providing to their customers their services through digital services rather than through manned guards. But both companies have grew through acquisition. So Securitas and G4S in many countries are legacy security companies that have been acquired by G4S or Securitas. So it's sometimes there's a corporate decision within Securitas or G4S that they're going to use a certain product, and now it has to be implemented across hundreds of different security branches that they own globally. That filtering sometimes happens a bit slower than we want, sometimes even slower than they want, because they find that they can't really enforce decisions on the different branches overnight. So sometimes it takes a bit of a transition. So I would say to your question that the rollout has been slower, not because of lack of desire for adoption, but because they found that it's a much more tricky maneuver than just corporate decision that needs to be implemented. We now sometimes have to work branch by branch and educate them on the product and get them to implement that. So it's taking a bit longer, but we're sure that the growth is coming up.
Okay, thanks. Good answer. Also, I wonder if you have considered like any medium-term financial targets, like revenue growth, profitability targets, etc.
We have, but since the company is now in a position that we're not providing guidance or providing any forecasts, then it's not something that I can share. Obviously, the company is on a plan for growth. We are looking at significant growth. We also have very clear profitability goals, but beyond that, I cannot give specific numbers at this point.
I understand. I've been wondering for quite some time, actually, why a company like Securitas or G4S don't just acquire you. Why hasn't that been the case?
Without going into our discussions with these companies in the past, my analysis is they are very much focused on delivering their core services, and acquiring a technology into a company that is still unfortunately based mostly on delivering services is a bit of a stepchild within their organization. So obviously I don't dictate their strategy, but I don't rule out that this might be a possibility in the future. But I think both companies have not yet matured to the point that they think that it makes sense for them. But I'm just speculating.
I got it. Thank you. I think that's all we had time for, but thank you so much for the presentation and answering my questions.
My pleasure. Thank you very much all for joining. Enjoy the rest of the day. Bye-bye.
Bye-bye. Hi and welcome back to ABG Investor Days. My name is Simon Johnson, an equity analyst here at ABG, covering small cap tech and gaming. Today I have the pleasure of hosting Fredrik Sjöholm, VP Sales from Precise Biometrics. He will give you a presentation of the company, and after which I will host a short Q&A. And with that said, I will leave the floor to you, Fredrik.
Thank you very much, Simon, and good morning, everybody. My name is Fredrik Sjöholm. I'm VP Sales at Precise. But today I will also be here in the capacity of interim CEO, which I am from beginning of March until our newly appointed CEO, Patrick Höjer, will join us in June. As Simon said, I will give you a short update on Precise Biometrics today. So we can move to the next slide, slide 2. So I would like to spend the next 15 minutes or so providing an overview of our Precise, what we do, and the value we provide to our customers and partners. I would also like to give a brief summary of our recent Q4 report and the focus we have in the company going forward before we open up for questions in the end. If we move to slide 3, please. So this is our vision at Precise, and I would like to highlight a few key takeaways from this vision. We focus our business around identification, and specifically identification done in a digital way that can be used in various applications. And identification in a digital age is of course, and must be done in a very secure way, obviously, but it's also important that it can be done as conveniently and easy as possible. And this is critical for the solution to be used by all parts of a trust chain, especially by the end user. So this is why we develop our identification and also verification solutions, always with the end user in mind. So being an end user of Precise solutions, you should also always know that no matter who you are, where you are, and what you do, you are the key. If we move to slide 4, please. We provide our solutions in 2 business areas. Digital identity is where we develop and sell identification and verification solutions. And we do this through 2 brand names, Unique and East Coast. The other business unit is Algo, which is where we offer software for fingerprint sensors used in various applications. And here we operate under a few brand names, Biomatch and BioLive, with a specific takes on these, and I will come back to those. But let me expand a little bit more on the 2 business units on the next slide. If we move to slide 5, let's start with digital identity. We can move directly to slide 6. So digital identity for us, this is the newest business area, which was established in 2018. This is where we provide fully digital identification and verification solutions. The foundation is based on biometrics, but we can also combine biometrics with other digital verification means based on the customer needs and use cases that we offer the solutions to. And the potential applications and market segments are extremely broad. So for us, it's very important to have a clear focus to be successful. The first focus we have selected is physical access, where we use face biometrics, which we call the Unique product. And then recently, we also added digital visitor management solutions through the acquisition we did in beginning of December of the Swedish-based company East Coast Solutions. Early on, when we developed this business unit, we decided to both develop and market and sell the solution, close collaboration with partners. And it has also been important for us from the beginning that these products should be sold and be generating revenue under a software as a service business model to be recurring revenues. From a customer perspective, we offer a number of benefits for the customers using our solutions. And the combination of these is where we have the strong benefits of both offering high security and convenience for physical access and visitor management. If we look at the phase and the acceleration of the company and this business unit over the last 3 to 4 years, we've seen a rapid build-up of the solution and expansion, both number of installations, customer installations, but also number of partners that we have added in the business unit. So in 2018, we built a basic platform for Unique, and in 2019, we took the decision to focus on physical access as a first step. Then in 2020 and 2021, we quickly onboarded the first customers. And by end of last year, we had approximately 60 installations for commercial and pilot use cases in Nordic countries, mainly in Sweden. But today we have quickly expanded that number. For Unique alone, we are close to 70 customers or installations today. And then, of course, with the acquisition of East Coast, we got another almost 1,000 installations that we added by end of last year. And with these investments that we've made in the Unique platform, together with the addition of East Coast, we are very well prepared now to continue to accelerate both the unique and the East Coast position in Sweden. We've also started to expand in the Nordic region, and we have actually the first installations in Norway happening more or less today as we speak. So now we can move to the next slide. Slide 7, please. So just a short update on East Coast Solutions. So we, as I said, end of last year, we acquired East Coast Solutions, which is a leading visitor management solution in Sweden. And of course, with this, we accelerated our SaaS business model and the offering we have in the digital identity business unit. We both increased the revenues, but also strengthened the technology platform and the competence base, of course, in the company. So together with Precise and the East Coast products together, we of course foresee very significant synergies, both in terms of access to market and the customers, but also in terms of product offerings that we can provide to our customers. And in addition, I would say, to the product and the go-to-market synergies that we of course see, another important aspect for us and to reach success as a company of our size is also that we see close synergies in the way we're working and the people and culture. And this is really critical for us because we have a very open mindset and an agile way of working in the company. And of course, we must make sure that also the acquired companies work in the same way. And we did find a really good match in East Coast. We can see today that the integration work that we're doing is well underway. And actually, we will showcase the first part of an integrated product offering already, well, actually tomorrow and Thursday at the security exhibition, SecTech in Oslo in Norway. So far, very good progress on the integration. If we move to slide 8, please. And as I mentioned earlier, partners play a key role for us and has a very strong importance for us. So over the last years, we've built up an extensive network of partners, both in terms of access management providers, such as the ones you see to the left in the slide, the leading access management solutions in the Nordic region, as well as a few international vendors as well. And we also offer our products to an increasing network of distributors offering security and access products in the market today. You see companies like Hateland, Electroscandia, Copiax, etc. And then, of course, to drive both sales and installations, we work through a large network of installation and system integrator partners, such as the ones you see here in the middle. And they both install and resell both the unique and the East Coast products to our customers and prospects. And then, of course, in addition as well, we work with a number of technology partners, provide different parts of the platform, and also provide specific solutions that we can offer to address specific customer segments and use cases. If we move to slide 9, please. So if we look at on the customer side, today we have, as I said, installed a unique product for physical access and entrance to close to 70 customers and prospects today. And then we, of course, have the other approximately 700 customers of the East Coast that we have added. But I would like to give an example of a customer that's one of the early customers we started to work with for the unique solution. And this is Algeco. This is one of the major providers of temporary buildings for both living, office spaces, education, and other type of temporary buildings. They decided 2 years ago to install unique at a large battery factory, the north of Sweden, that is being under construction right now. When we came in contact with them approximately 2 years ago through one of our partners, Algeco had been looking for several years to be able to manage the access and booking of rooms to those temporary buildings without any type of physical keys. And in less than 3 months, we provided exactly that to them actually. So today, to this day, actually, to date, we have now close to 1,000 rooms being equipped with a fully digital solution to distribute both access rights and book rooms for all the construction workers at this site. And then in addition, we have also taken the next steps together with Algeco to provide additional services, because what we basically have built here is a digital platform for those temporary bricks. So now we have added, for example, possibilities to control power and environmental in terms of heating and light, etc. So this, I would say, this customer journey shows that how we can, with digital solutions, can add value and to some extent also, I would say, impact a traditional industry and help them to do business in new ways that they hadn't thought of before. If we move to the next slide, please, slide 10. So what is the total opportunity in addressable market for digital identity, the digital identity business unit for us? Well, only for physical access and visitor management solutions. We have done some research and we estimate this to be close to 3 billion Swedish kronor in the Nordics alone in the coming years. So I would say this is a journey that we've only started to work on and only started to tap this opportunity. If we then move over to slide 11, I would like to turn over to our algo business. So we can move to slide 12. So our algo business unit is basically the foundation of our biometric expertise that we have built up in the company over the last almost 25 years now, actually, since we were founded in 1997. And this business unit is where we develop and sell advanced software algorithms that are used to recognize fingerprints in various solutions. And they can be used in various applications. Of course, the most well-known and mostly notable area is, of course, the mobile phone industry. And here we have delivered the algo solutions to more than 400 Android phones over the years. And we work in this area closely with sensor hardware partners, companies like ABGSC in Taiwan, Qualcomm in the US, and others typically they deliver the combined sensor and software from us into a module that they then deliver to their customers. And the products are used in primarily 3 areas, and I would like to go into the next slide to describe a little bit more about it. So if you move to slide 13. So if you look at the market characteristics in these business units for the 3 specific areas that we're working on, it's in the mobile business area. As I mentioned, this is of course the big volume driver with 1.2 billion Android phones in the market, a number of PCs and laptops and tablets in addition to that. This is a mature market, both for phones and PCs and laptops. But I would say that there are still quite a few changes happening. We see new phones coming out with additional features, and I think some of you who follow us have seen some recent announcements, for example, of Vivo phones, IQ08, for example, where you have additional features in addition to just opening the phone. It's a mature market, of course, as I said, but it's also and it has a lower unit price, but of course higher volumes, shorter product life cycles of 1 to 2 years. And as I said, we integrate our products into modules that are sold by sensor manufacturers. The other area is smart cards and also what we call embedded solutions. Here we have, of course, also a very large addressable market of some 2 billion contactless cards used both for payment but also for secure access. This is, though, a market still in development. We have seen the first commercial rollouts in some European countries, but it's still not fully commercially proven. And in order for the market to take off, we will see that the unit prices of components used in the smart cards, the electronic components, will have to go down in price over time. It's a life cycle of about 2 to 3 years, and the same here. We integrate our products into modules that are then approved and certified by the payment institutes, for example, MasterCard. And then the newest addition is automotive. It's a smaller market, of course, approximately 80 million cars annually being produced, but it's a young market, so the first sensors in the cars have just started to happen, and it's a significantly higher unit price for the modules where you sell into the automotive industry. Longer life cycles, so 7 to 10 years, and for us it's a slightly different business model because here we sell our products into larger modules that are developed by ODMs who then integrate it together with other sensors, other displays, etc., and deliver a full larger type of module into the automotive audience. So let's move to slide 14. So I would like to give a short summary of our Q4 report and an update on our focus going forward. So slide 15, please. So if you look at Q4 that we presented 2 weeks ago, on the sales side, we increased revenue by approximately 20%. This was driven both by growth in license revenues from both the Algo and the digital identity business areas. We also, for the first time, actually announced the annual recurring revenues, and we say that we are now at approximately 13 million by end of going out of December on an annual basis. The gross margin was slightly lower, and this is due to increase of hardware sales that we sell when we deliver both unique and East Coast products going forward. We were EBITDA positive and also had a positive cash flow. And during the quarter, we continued to expand the SaaS business area, digital and the digital identity business area and SaaS business. We also saw an increase of number of unique installations. We entered the automotive segment, as I mentioned, with the 2 automotive ODMs. The contracts were closed end of December. And then after end of the quarter, beginning of this year, we also announced a partnership with Infineon Technologies in Germany to cooperate on bringing fingerprint technology to the automotive market. So if we move to slide 16, I would like to summarize and present the focus we have as a company going forward. So overall, we see a strong commercial potential for the digital business, identity business area. During the last 3 years, since we started to build and commercialize Unique, we have been able to build a strong customer portfolio. We have also built this, a broad and expanding partner network within both the security and access market in Sweden in quite a short time frame. Based on this experience of building a partner network, we see a significant potential for physical access and visitor management Swedish and the Nordic markets. We've had a clear focus to build the business in a controlled way. So we started build the business in Sweden, the digital identity area. But we've also now taken the first steps to address the Nordic markets gradually. And as I mentioned, we have already the first installations in Norway ongoing. We will continue to focus and build on the scalable SaaS business model that we have for both Unique and East Coast. And this is really important for us to continue build a solid business where we see continued growth and higher margins over time. We will, of course, continue to develop and expand our Algo business, both for the existing market areas, but also into new segments when we see solid opportunities and needs in the market. This is still an evolving market in the fingerprint biometrics, and we will see new opportunities. So we will focus on investing in profitable market segments in this area, and that will be key for us. So overall, we see clear, and we have clear strategic initiatives for growth, both in the Algo and the DI, digital identity business areas. Thank you very much for that. And now let's open up for questions.
Yes, thank you, Fredrik, for that presentation. And I would like to start off with the Algo segment and the automotive industry that you have been taking important steps into recently. And recently with the partnership with Infineon, for example.
Yeah.
What is the long-term potential of this agreement, you would say?
Well,
in terms of volumes, etc.?
Yes, of course, volumes is always difficult to predict, but we can say that Infineon is one of the leading global suppliers of electronic components to the automotive industry. But they also work in other security and payment-related segments. So we, of course, hope that we can benefit from their market reach and their relationships with key customers in the automotive segments, but potentially also outside of automotive going forward. I would say automotive is, we've seen the first few car models in Asia over the last 2 to 3 years, more like pilot tests. But with these two announcements that the two contracts were closed end of December, we will see higher volume car models being introduced, hopefully already by end of this year. So there is absolutely potential that this will grow.
Yeah, I got it. And but can you say anything about Infineon's reach in terms of market share, etc.?
Well, it's difficult to say because they have a reach both in terms of fingerprint sensors, but they also, of course, are a large supplier of processors, MCUs, and secure elements to both automotive and, as I said, other areas such as access and payment solutions. So our products are integrated two ways. So the software is running both on the sensor but also on the MCU. So you can see, so it's difficult to say an exact number and market penetration because it depends on how and where we will be integrated going forward. We can see different ways of being integrated with Infineon, both, as I said, fingerprint sensor, but also on the MCU, depending on how you build the system.
Okay, thanks. And turning to East Coast, a very interesting acquisition. It adds ARR, it adds, importantly, profitability, etc. What is strategically looking forward? Will you try to integrate it with the other DI segment, or will it work like a different entity inside that unit?
Well, today East Coast is a broader company in the Precise Group, but of course the intention is that we will integrate both the sales, market, and product-wise. We will integrate our solutions and market reach. So as I mentioned in the presentation, we've already started to integrate the product side. So we will actually show a first way of where you can use unique face solution from Unique when checking in to East Coast visitor check-in solution. And we will continue to expand on that. So basically, looking forward, we foresee that you should be able to have a combination of East Coast traditional ways of logging in and add unique face solutions, both for visitors, but also in the next step to combine that with access into, for example, various locations. So, and then obviously we would like to take advantage of their market reach. As I mentioned, they have 700 customers today, so of course that's a platform we would like to use well for introducing.
Okay, thanks. And a last question about the component shortage. What have you seen there in terms of impact on the business, and what can we expect going forward here?
I guess we mentioned in our Q4 report, we did see an impact on the algo business in terms of course, mobile phone, basically for us mainly the mobile phone industry having severe they are impacted by the component shortage. So of course the royalty volumes were affected by that. And for the Unique business or the DI business side, it's less of an issue. We do have some components, of course, that we are delivering. You need to install cameras and servers together with Unique systems. So of course some impact, but not yet to a material aspect.
Okay, thank you, Fredrik, so much for taking the time and coming here and presenting. And thank you to the audience.
Thank you, Simon.
We will take a short lunch break and be back after lunch for more presentations. Stay tuned.
Welcome back to the ABG Investor Days. My name is Johan Brown, a retail analyst here at ABG. We now have the pleasure to welcome Håkan Lagerberg, the CEO of Swedencare, to present. Please go ahead, Håkan.
Thank you so much. Thank you for having me. Always a pleasure to be here. And I will be here on my own without the CFO. And it's 20 minutes of presentation and then open for questions. So next slide, let's start. So Swedencare is a company in the animal health space. We're predominantly working within non-prescription based products. We do have some contract manufacturing and development when it comes to RX products, but our own sales to the market is non-prescription based products. We are a true global company. We sell our products in over 50 countries. We have our own activities in 9 countries, and we have been participating in the consolidation of the business or the sector. I mean, since we went public in 2016, and really been fueling that process the last 2 years, where we've made 9 acquisitions, and so we're in total 17 group companies now. Some of them are very small, but we have grown significantly these last 2 years. We have everything from our own production to distribution, and also direct sales to consumers. But predominantly, we work with partners selling to the end customer. We work in the range of companion animals. Over 50% of our sales are products to dogs, but then we also have products for cats and equine in some markets, not in every market we're in. We have a strong range of different brands within the group. We sell under several brands and in different markets. We have PetMD, a large online-only brand being sold predominantly in the US, and we have started last year sales in Europe as well. Then we have our most, let's say, I would say, most well-known and most widely spread brand is the brand that Swedencare started off with, the ProDen PlaqueOff, a unique oral care product line, been sold since mid-2000 and been gaining sales year after year, and we have also expanded the product range there. So if you look at the down at the left bottom, you see that the product ranges as it was for 2021, I would say. ProDen PlaqueOff for oral care being 1/3. That's not correctly true, but it's a bit less. But and then we have nutraceutical supplements, and those could be powders, soft chews, treats, and also some oral liquids and gels. And then we have topical dermatology. That's become a very important product sector for us, actually being the biggest if we look at 2021, and predominantly sold, those products predominantly sold in the US market, and we are planning to expand international sales for those. We are at the end of the year, we were 272 people in the organization, but we made 2 major acquisitions signed them in January. So now, when those have been completed here in February and March, we are nearly 500 people in the organization. Let's say a feature of Swedencare has been that we have always had strong growth linked with high profitability, and that's our aim to continue going forward like that. So that's really the key for Swedencare, is that we are as you've seen, a large group of companies, very entrepreneurial. The companies that join our group, they keep on working independently, and we focus on, let's say, synergies to grow the business, not so much from the cost perspective, even though we do some low-hanging fruits projects where we could increase our margins and just make the operations more efficient. And the more in long term, of course, we are looking at streamlining a bit. Some of the brands will continue being sold in markets where they are strong, but not going international. And some of the brands we have decided to go really on a broad front internationally. So we have some different strategies going forward for the years to come. On a pro forma base, including the 2 acquisitions we made in early 2022, we had net sales of 1.6 billion Swedish kronor with an EBITDA margin of 28%. Next slide, please. Highlights for 2021. We made actually 4 acquisitions in 2021. One really early in January, and then in end of March, and then mid-year, and then a small one at 1st of October, and two more so far. So of course this been really important factors for us in 21. But as I said, we are very even though we made many acquisitions, we are very strict in analyzing the businesses that we take into the group, and we are very confident that they will work excellently within our group. The same type of people, same type of organization. A vast majority of them has actually been the founders selling to us, joining our group, and in all of the transactions there's been one cash component and then also payment in Swedencare shares, so that we have a joint interest of continuing to grow the business. So far it's been excellent, and due to the pandemic, of course, many of these acquisitions has been made more or less online. Of course, we have local organizations in the countries where we made acquisitions, so we have been meeting physically as well. But I mean, most of the work has been done online, and end of 2021 was fantastic when we could convene all of the group managers in Tampa, Florida, where we have several businesses, and just meeting in person, because that's of course really important. But we have learned to work online, of course, like everyone else, and I mean, our track record has shown that we've been able to make lots of acquisitions both in 20 and 21 online, and it's been a success so far. Our organic growth for 21 was 17%. A bit COVID affected start of the year, and then coming back a bit after the summer. So it's been a couple of strange years for the sector as such, and also for us, of course. And it's been not only negative, because the number of pets have increased, and online sales has continued to grow even faster than expected, and all of that. But of course, this start and stop process for physical stores has been a bit challenging, and made the market a bit cautious. So we expect, if pandemic-wise it looks good, but now of course the situation in the East is a bit scary, and you don't really know what will happen from that. But so far we haven't seen anything important, and Russia is not a big market for us, and we will of course not export anything else that way as of now. But we were fairly content with the 17% organic growth. Lots of integration projects, but bear in mind also that we really focus on external sales. So even though we have lots of projects internally, we do focus on not tampering the business as such. We do focus on external sales, but of course there has been some move. We have moved into a joint facility in Tampa, Florida, for a couple of our group companies. Production-wise, we have started to move external production to internal production. Product launches, both new product launches that were planned, and we have also started to pick the most important and interesting products from the different group companies, and included them in a couple of our brands, so we may make the easy product extensions. Increased internal product supply, of course, that has been one important factor for our acquisition spree, is that we really want to secure internal production, because we have been hit in 20 and 21 with some supply issues. I mean, I wouldn't say that it's only due to COVID. It's also due to the markets being very strong, and our main market is the US, and the US market has been growing very fast the last years, and so it has affected the product supply, and we're really still in the process of moving to internal production, even more now since we made one of the biggest acquisition we've ever made with NaturVet that I will present a bit later. And of course, when we grow at this rate, of course, we will also be open to adding key people and skills to the organization. We have, I mean, both let's say actively, but also we are being noticed a lot more, not only by investors, but also from people in the business. So we have lots of people wanting to join us, and we're in a really good position to add just the right people that we are looking for. Next slide, please. Some KPIs, net revenue, not pro forma then, 770 million SEK, 2021. With an EBITDA of 190 million, EBITDA margin of 24.6%, a bit lower than previous years, and that's been let's say we knew that would happen since the video acquisition we made this summer. They are operating at a bit lower margin right now, but that will increase already in 2022. So that wasn't a surprise to us. Operational cash flow, we have always been cash flow positive over the years we've been listed, and 125 million last year, and we have or the board has proposed a dividend of 0.2 SEK per share in this coming annual general meeting. Next slide, please. Sales per region. Yes, you can see the shift from 20 to 21, and that will actually continue. North America has been growing from 45% to 71%, and that will continue in 2022. So North America will actually be plus 80% for 2022. And even though we are growing in Asia, of course, since we made so many acquisitions in the US, that affects the percentage in the different regions. But US, North America will keep on increasing. UK, Ireland, a really important region for us. Europe will also grow. We also made one acquisition there this year of Innovet Italy. And let's say that, as I said, we sell in over 50 countries, but that's predominantly with the ProDen PlaqueOff line. The other brands have not that same expansion all over the world, but that's something we will work with. Next slide, please. Product category, that will also change, of course, and has changed a lot since you saw ProDen PlaqueOff was 54% of our sales in 2020. In 2021, down to 20%, and that will of course be even lower in 2022 since we're adding a couple of new big acquisitions. So topical dermatology 39%, and nutraceutical supplements 30%, and the pharma part will grow in 2022 and 2023, and that's what I said in the beginning is development and contract manufacturing, not products that we sell to the market. Next slide, please. Rolling 4 quarters, you see steep curves all over, and that will continue. Next slide, please. Would like to speak something about our recent acquisitions. The one in the US, the biggest we've made, NaturVet, a pet and online brand sold in over 15,000 pet shops in the US and Canada. The #1 pet supplement brand in 4 out of 5 pet chains in the biggest pet chains in the US, and really a vast product line, 250 SKUs, and really state-of-the-art manufacturing when it comes to soft chews, and they also have some contract manufacturing for soft chews, and we are in the process of installing a third product line that will actually double the capacity of what we have today. So the years to come, NaturVet will be one of the fastest growing companies within the group. Sales 21 was $63.9 million and plus 30% in EBITDA, and nearly 200 employees based in Temecula, California, with all of their operations. And Innovet, a very specialized and local company, like many companies are in Italy, very strong in the Italian market, 90% of their sales in Italy. A bit higher, let's say, scientific level than most of our group companies. We normally don't have internal R&D. We work with the partners, academia, but when it comes to Innovet, they have a small R&D team working with a couple of universities in Italy, and also compared to most of our group companies, Innovet has a strong patent protected product line with Innovet products, so that we will launch internationally. They have around 20 plus products, 2 products that they have launched internationally with 2 different veterinarian companies for Europe and the US, and we are just now in the process of looking how we should launch the other products, if we should launch them under some of our current brands, or if we should continue to work with some of the veterinarian companies that are present all around the world. So, and as most of you know, that we have lots of different sales partnerships with big veterinarian companies. Innovet had sales of 13.5 million euros, also plus 30% EBITDA margin, and 15 employees, and around 30 external sales reps covering the Italian market. Next slide, please. The pro forma shown that or talked about that previously. Swedencare 2021, 773 million. The pro forma acquisitions that were made in 2021, adding 196 million, and then NaturVet and Innovet 686 million, and some eliminations for internal sales. So 1.6 billion going into 2022. And the next slide, please. And that links up to the financial goals that we presented end of last year. We've said that we target to reach 4 billion SEK in sales with a 30% plus EBITDA by 2026. And that's really how we came up to that number, is that we expect the group as such to continue to grow with around 20% organic growth going forward, and then adding a couple of acquisitions going forward. And of course, when we worked with this financial goal, we were fairly certain that the smaller one, the Innovet, the Italian company deal, would be concluded, but we didn't plan on the NaturVet deal that was substantial, as you know, with $63 million in sales. So of course this target being very challenging half a year ago, now it's still challenging, but of course when we have performance sales of 1.6 billion in 21, I would say that the organization is very confident that we will reach this. And then last slide, to hurry up here. just to show that what we are going to prioritize the coming years and looking how we will do it. I often get questions about the pet market growing with 6 to 7%, but then I often have to point out that the premium products, the supplements products where we are in, are actually growing with double digits, at least in the bigger markets like the US and the UK, and also in Asia it's been growing a lot faster. And why we think that we can grow by 20%. It's really taking advantage of all of the opportunities we have within the group. So in, let's say, short term, expanding the new products and brands on new markets with current presence and in new channels. So many of our companies that we have acquired, they have been strong on one or a couple of markets. They have been strong in one channel, that is to say either the veterinary side, the pet sector, or the online. And now we're just taking advantage of the competences and the opportunities we have within the group and seeing where we could expand, either with the actual brand or just by adding that brand's top products into a new brand that has a strong presence in a new channel. So it's really just growing the sales fairly easily. We have also always been very, let's say, proud to have skilled and cost-efficient marketing campaigns, and that will continue. And that's often you could say that it will be online. Online, we see both in social media with the big platforms who we work with, Amazon, Chewy, Tmall in China. We are really working with either in-house or excellent partners, external partners, to really try to be so cost efficient as possible and have good ROI on all the campaigns that we make. Also with R&D and other resources, really focusing on sharing that within the group, not have different group companies working on the same type of projects. So that's a key issue for us, to really utilizing the best competences within the group for the right projects. Also, of course, getting our hands on the margins as early as possible. So really focusing on getting in-house production instead of having external suppliers, both from a margin perspective, but also from a product security and supply issue. And as I said, we are being noticed a lot more now within the sector. Many, let's say, bigger organizations, companies that previously thought that Swedencare was a bit too small to be partnering up with. It's a different sound now. Lots of interest and lots of opportunities being discussed on bigger deals. So that's really where we focus this, I would say, in 22 and 23. And then going forward a couple of years down the road, it's basically the same, just that the internationalization is a more of a long-term view. It takes time, especially now after COVID. The wheels have to be started up again. So the expos are starting up. Traveling, at least going west, is okay for us now from European perspective. Going east is still a bit problematic. Most Asian countries haven't opened up yet, but we're looking forward to that. And keep on growing online. That will be the strongest channel growth going forward. And looking at new products and offerings, keep on developing that. Being fast to the market, that's a key issue for Swedencare, is that we are a fast-moving organization, and that's a very, very important component why we will grow faster than the market. So, Johan, now I heard along.
Thank you very much, Håkan. We are unfortunately out of time for the Q&A, but I want to thank you very much for that interesting presentation and everybody for listening in. Thank you very much.
Thank you. Bye-bye.
Hello everyone and welcome to ABG's Investor Days. My name is Carl Bokvist. I'm an industrial analyst here at ABG. With us now we have the pleasure of hosting Transtema and CEO Magnus Johansson. The presentation format will be as the ones we've had similarly previously during the day. So we will first hear a presentation from Magnus and afterwards a bit of a Q&A. Without further ado, Magnus, thank you for joining us and welcome.
Thank you very much. My name is Magnus Johansson. I'm the CEO of Transtema. I'm happy to be here today to give this brief presentation of the company. Transtema is a professional services company in the telecoms market. We mainly do business in the telecom arena, but we have broadened it over time. We provide a full range of services, including the network design, and we're talking about both fixed and wireless networks. We do planning, we do build and engineering on the networks, and we also do installation and configuration, of course, of the equipment involved. And our focus is on the operation and maintenance side, where we provide 24/7 operation. We cover the Nordics, mainly in Sweden and Norway, but also we have some business in the other Nordic countries. But as I said, mainly Sweden and Norway. We are very proud of our certifications and the quality level that we have achieved, including a number of ISO certifications, the Swedish certification Robust Fiber, and a very highly appreciated security classification that we have here in Sweden, which it means that we can take high security projects on hand. And we also have been awarded a Telia award last year for Best Collaboration Partner, which we are very proud of. If we look briefly at the company, just a few key facts. We are around 1,100 employees. We established back in '97, having the same business idea basically ever since. Last year we had a turnover of roughly 1.7 billion Swedish kronas. And since last autumn in September, we are listed on the main market in Stockholm in small cap. Currently we have presence in 85 locations in Sweden and a number of locations in Norway as well. Our main business, which you will see, is handling a massive amount of tickets, which could be small installations or service tickets. We handle about 300,000 of those tickets every year, so it's a rapid business that we're working with. If we look at our strategy, or rather the foundation of the company, our bet is that in the future will we see higher and higher requirements for on all of the communication networks, including fixed networks and wireless networks. And those requirements include, of course, connectivity, availability, reliability, and last but not least, security. And that is the foundation of our business, that we aim to fulfill that need or that demand. And we're talking, of course, both human beings, but also machines, or you may call it IoTs or machine-to-machine communication. Everything will be connected more or less in the future, and everything needs to be online and working. To meet this demand, our focus is to be that partner that can provide these reliable and stable and secure networks to the community in general. We talk a lot about innovation in Transtema, and that I will get back to that a bit later. But we want to drive a fairly conservative business which we are in, towards digitalization, towards innovation, doing things a better way, a smarter way, a leaner way, and a more sustainable way in the future. And of course, we aim for leadership in our market in terms of leadership, but also equality. We have a history of being fairly male-dominated market in the telecom market. If we dig down into our business model, as I said, we focus on operation and maintenance, which means we're O&M centric in a way. So our business model is a bit different from some other companies in our field that focus on projects and building the networks. we aim to achieve what we call vested agreements, which means that we partner with our customers. We have a very strong and open relationship where we can adjust terms and conditions and pricing over time for mutual success. Because what we do provide customer satisfaction to our customer's customer, and that is a very important part of our business. And the way we approach our business is that we aim, or both we and our customers aim to find or to sign long-term contracts. When we sign deals or we make partnerships, we go in for the long run. Which means that our customer relationship, they grow very strong over time. We have a predictable cash flow, mainly because of the 300,000 plus tickets we have every year. That gives us more or less as a SaaS model. We have very high predictability in our cash flow and of course in our revenue also. This also means that the seasonality is low in the company. Also in terms of changes in the overall economy in society, we are fairly resilient to that too. And of course, our business includes that we have lower risk than in the market in general. Unique selling points we have in the company, that we have a national coverage. We can reach more or less every Swede in an hour. We operate with that national coverage nowadays both in Sweden and Norway. And we have dual network operation centers, both in Sweden, that provide 24/7 network operations. We have a field services organization, and we have a customer support. All of this is aiming at keeping the networks running all year, every day. I mentioned innovation in our service delivery. We work hard, we invest a lot and work hard to both develop automation and digitalization in as I said, a fairly conservative business. And I think we have succeeded so far, but we have a lot more to do in the future. Just to be very clear on the business model and how we strive to make our money. If you look at this picture, you see at the bottom picture here, we have a production platform, including a service operation center, network operation centers, our logistics, or our procedures, our IT systems, our entire infrastructure with offices and presence throughout the country. And that platform can be reused, whatever kind of business we add on to our business. And we have a number of resources, of course, both internal resources, multi-skill engineers, we have managers and what have you. We have also subcontractors, we have consultants, our own consultants offering services to our customers. And on top of that, we have our business. Our core business is telecoms, but we are aiming to add on more business on top of the same machine. We are going to talk about e-mobility and also facility and site management in a while. And as we develop new businesses that leverage from the same platform and the same resources, we see a clear opportunity for margin improvement over time. Just as an example, the e-mobility arena that we have entered last year, and we now see traction in the business. We have a fair amount of great customers in the e-mobility area. We provide roughly the same, as you see, as we do in the telecoms, meaning we have our national installation capability, we do balancing, we do design optimizing, and we can handle the most complex projects as we do in telecoms. We manage all the connectivity from the charging station, whether it's fiber or wireless, we don't really care, we handle them both. And we provide the 24/7 remote monitoring, the administration and operations. And of course, our immense field service organization is always ready to fix whatever is wrong. And on the right side of the slide, you see the projection of the growth of installations, in this case in Sweden. So you can see that we're only in the beginning of this huge opportunity. Facility and site management, that's more of a kind of a bolt-on business for us, since we have our organization being present throughout Sweden and now also in Norway. We we can add more services to our customers, and that is what we're doing now. We add capabilities within power, cold, access, and security, and that's sort of the name for all that. It would be site management when we talk telecoms. We have recently signed a contract with Cellnex here in Sweden, managing 2,700 sites and towers throughout Sweden, which is we're very proud to be able to have that contract. And as we see in the market, as telcos tend to outsource or sell their assets and lease them back, basically, that means a growing opportunity for us in Transtema. If we look at our track record, our financial performance, and I know these pictures are very small, so I don't expect you to be able to see the numbers. Last year, we delivered a 20% organic growth, which we're very proud of. We had a EBITDA margin of roughly 8%, also a very fine number. And if you look over time, we are certain that we can achieve our financial goals that we have set. Also looking at cash conversion and the capital, working capital, we have a stable financial situation. Just last week, we signed an agreement to acquire a Norwegian company called Testa Connect. And we have previously announced that we are looking for two kinds of acquisitions. And one is to be able to establish in a neighboring Nordic country. And we have been looking for a company much like ourselves, meaning that we can provide a full range of professional services from planning, from building and operations in that country. And after a long process of finding the right company, we found Testa Connect, which we now have acquired, which means that we have a platform in Norway to further grow our business. They are a full-service telecom partner today. Biggest customer is Telenor, but they also have Telia and Global Connect on the customer list. We see possibilities to expand the customer base, of course. We see operational synergies with our platform and the resources we have in the company today. So they are ready and to add new business opportunities. So we really look forward to start working with our new Norwegian friends. Looking at the numbers, these are pro forma numbers. Basically what we do, we add on roughly 400 million Swedish kronor in terms of revenue and more or less the same margin as we delivered last year. So we see this as a great leap forward for us. Sustainability for us, it's not a, how do you say, not a burden. It's not just added cost or anything like that. We quite early realized that sustainability is much more beyond just saving the planet. For us, it's really a business opportunity. I mentioned innovation, where we can, if we can save a visit to a site for a service, we can do it in some other matter. That will be a real boost to sustainability. So we see sustainability as an opportunity, which makes us really want to drive the question of sustainability within our company. We see long-term profitability options or opportunities. We see that our brand would be much more appreciated in the market. And the reputation in the labor market, when we're in a competitive labor market, if we can be a much more attractive employer, then it's worth all the money in the world. Business or product development, back to innovation again, and we will see a quite interesting development within Transtema in the future. And of course, we also see that risk is decreasing as we add more sustainability in the company. Talking about sustainability is one thing, doing it is quite another. And we have decided on fairly exciting goals. Together with our main customers, we have set these goals, and we have set partial goals along the way, how to achieve them. And we have say that in 2030, we're going to be absolutely free of fossil CO2, which is quite a challenge because we have a lot of cars today that needs to be replaced. And we also say that by the same years, 2030, we want to have all our waste is going to be recycled. So we have we're really trying to push the sustainability issue. And we also signed up for the SBTi, or Science Based Target Initiative, and we have set our goals, and we're going to follow through on all of them. Finally, what's happening now in Transtema? What are we going to do next? We have a solid underlying business in Sweden and now also in Norway, and we're looking to add on more business opportunities, of course, leveraging from the platform on our factory, so to speak. We're already doing my mobile rollout. Fixed wireless is underway. Indoor coverage, e-mobility we talked about, FM and site management, but also in terms of IoT, prop tech, we see opportunities where we can provide all the connectivity needed for that to happen. And of course, in the security area as well. So we're going to add on organic growth, seeing new business opportunities going ahead, but we will see, you will see over time also bolt-on acquisitions from us. Could be adding a specific skill or customer through an acquisition, or even entering a new geographical market. So we see an exciting future, and we really look forward to all that happening in 2022 and beyond. Thank you.
Thank you, Magnus. So to start off, before we discuss the acquisitions, you discuss the kind of transition in terms of strategy for Transtema, moving perhaps away from fiber to the home and different applications like data centers, I think, towards the more stable business. How should people look at Transtema today when it comes to how much of a business that is related to new installations and how much is related to the standard service, maintenance, uptime focus?
If you're referring to fiber to the home, that's more or less ancient history now. That's back in 2018, in 2019 we abandoned fiber to the home projects. So from our point of view, that's just history now. If you look at our current business, we have a majority of our business in the operations and maintenance, and that's sort of the core. That's the how do you say, the spearhead of our company, because there we see all the benefits I talked about in our business model. But of course, we also do installations, we also do consulting services, etc., but to a lesser degree. But what we have said that the risks involved in excavation, large-scale excavation, no thanks. That's what we have said, and I think we have been really successful in transforming Transtema from back in 2019 to what we see today. And you can see it in our quarterly reports. So I think we're there. Now we need to expand and broaden the business.
Because as you mentioned, your organic growth is quite noticeably above your target, which is 10% total growth, I think, and margins at around 7-8%. Your target is 5%. How should we think about this as you expand into e-mobility and grow in perhaps new regions?
I get that question every time. We have performed above our financial goals. We know that, and it could be that the board of Transtema choose to adjust our goals. But what we have said, just after this strategy shift that we have been through, and now after doing an acquisition, we don't want to create expectations that are too high. Let's say that I don't think so, but let's say we do an acquisition that we need to fix one way or the other. So we will have a temporary dip in margin, let's say. So you will see adjusted financial goals over time, but the board hasn't decided to do it yet, at least.
And we hear a lot from different market participants that e-mobility is a rapidly growing segment. A lot of people want to try and position themselves for the growing market. It will be a kind of a significant amount of new builds. So how will you try to approach that market?
I think there are a lot of players in that market going in for in installations into private households, etc. They're a huge volume. That's not our way to do it, because then you will more or less end up back in the the place we left a few years back. But if we say we're talking about major commercial owners of commercial buildings, we're talking about the big product suppliers within e-charging, and we talk about the grid owners that want to deploy their power delivery. Then we see a huge opportunity both for being a part of, the professional rollout. It could be public chargers, etc. But of course, our core thing is not to really do only the installation. It is to get operations and maintenance in the rear, because then we have the long contracts, we have the stable, the steady cash flow, etc. So we focus on operation and maintenance, and just to be clear, we are not a power company. We focus on connectivity. We focus on the service and maintenance part. E.ON and Vattenfall and others, they provide all the power that's needed.
And about scale and managing things, and also a bit of sustainability, not having perhaps to make that extra travel. Yeah. You have a network operating center here in Stockholm.
Yeah. One of them is,
about the ability to service your entire business from a few central hubs. How should we think about this as you hopefully continue to grow?
They're both a security issue. I mean, different countries have different security requirements. So if we look in neighboring countries, I cannot really say what, in terms of technology, it's quite easy to operate and run networks from one central location, whether it's in Stockholm or in Bombay, it doesn't matter. But we need to take security requirements into consideration.
And then the second final question from me is the Detta acquisition. You mentioned a bit of where you saw potential for synergies in certain ways. What are the kind of three main opportunities you see with this particular acquisition?
I would say that the first and primary area is that it's a customer synergy. We have larger customers, larger than just one country, and be able to grow and expand together with our customer, whether it's Telia, whether it's Telenor, or it has a major impact that we can provide the same services on the same platform, makes it very easy for our customers to be able to deliver more on the same way. And then, of course, we have resources and we have all the experience and all the tools we have developed here, because we are more, more computerized in a way here in Sweden than they are in Norway.
And the final question, you released a press release not too long ago where you announced that you intend to step down as CEO and become chairman.
Assuming that the General Assembly will elect me.
Yeah, for sure. And that the CEO in your place will be the current CFO, Henning.
That's right.
And just, a bit of final remarks, why you decided?
It's just, it's really a lucky coincidence, so to speak. Our current chairman, Göran, has been chairman for 8 years. For him, it was to do the proper time to do a shift in generation. And for me, having been the CEO for 25 years, and when I get the opportunity to work from a board perspective, and so I said yes, of course. And for me, it was really easy because I had the best possible candidate to be CEO working right beside me. So that was really quick for us to agree. Okay, so let's do a generation shift, so to speak. So, but I'm quite confident that the road we have chosen to take, we're going to continue on that road, but we're going to do it properly.
With that, our time is up. Thank you.
Thank you very much
for joining us here. For those of you who are watching, please stay tuned, and the next company will be Avensia. Thank you.
Hello and welcome to this next presentation at ABG Investor Days. My name is Simon Granat and I'm an equity analyst at ABG covering IT and tech companies. And the next presenter here at our seminar is Anders Wetje, who is the CFO of Avensia, and he will present for the coming 20 minutes and then we'll follow up with a shorter Q&A session. So with that said, Anders, please go ahead and present.
Thank you so much, Simon. And it's a great pleasure to be here today, even if I'm not present physically. That will have to wait until next time, but it's great to be here and do this presentation. You can change to the next slide, please. My name is Anders Wetje, and I am presently the CFO of Avensia. I say presently, I have a relationship to this company actually going back to 2005. So I spent actually a long time on the board of directors with this company before I joined on an operational level from the 1st of January 2020. And I am now the CFO, which is a great pleasure. So I will do this presentation for you today. Next slide, please. Just to give you a bit of background and in what kind of landscape Avensia operates, we are right in the floodstream, I would say, of the digitalization that happens around us on a daily basis and obviously has been happening around us for quite some time already. Just to give you a few key statistics to put it in some kind of context. In average, we as consumers use 32 digital services per day. Quite an astonishing number in my world. 54% of us value digital interactions more than physical interactions. 58% of us prefer to interact on social media better than in stores from a consumer perspective. And 70% of us claim that speed impacts our willingness to buy things online. So this is just to give you a few key statistics that we are operating in this landscape that very much and very rapidly is transforming from a physical environment to a digital one. Next slide, please. So who are we then? Well, we like to call ourselves a premium partner for companies determined to be winners in modern commerce. Modern commerce is often the pure e-commerce component, but also today seen in a broader context where a lot of different channels interact towards us as consumers when companies are selling their products and making their offerings to all of us in the different markets where they operate. And that is really who we are. We are a premium partner for companies determined to be winners in modern commerce. Next slide, please. These are some of the companies that we have the pleasure to work with. There are a lot of names on here that I hope and think that you recognize. Lyko, for instance, Hemtex. We can see Apohem on there, which is a competitor to Apotea. And who else do we have? Dormi, for all of us that play golf. We have Indiska on there. We have Naked, which is a brand that has expanded extremely quickly, an online-only concept. Lindex, Stenströms, and so on. So these are all companies and all clients of ours that we work with. Next slide, please. And this is a testimony, a statement from one of our clients, the founder of Naked, a name that many of you maybe have stumbled upon in the financial press or in other environments. And this is what Jarno says, that we want to offer a unique e-commerce experience to women all over the world.
To succeed, we need to continuously develop our site and its content. With Avensia as a partner, we have the opportunity to manage our customers' high expectations while meeting our goals for growth. And that is obviously a testimony that we are very grateful to get. And I think it somehow summarizes very well what we do when we work with clients like Naked. Next slide, please. A little bit of our history. This company was founded back in 1998, so we are turning 25 years very soon. We were not at all focused on e-commerce in the beginning. The foundation was actually an e-learning platform that came out of the university environment in Lund. We got our first bigger e-com client back in 2005, so that is now 17 years ago. So we have been in the e-commerce space for a very long period of time. I would say that 2007 marks some kind of birth date for, or birthday maybe for Avensia as we look today. The originally founded company then merged with two other companies. There were some key players, key individuals that came on board. And from that point in time, it's been a growth journey and a journey towards the more focused modern commerce company that we are today. A few other key years, 2015, we introduced an information management offering. 2016, we established a development center in the Philippines. We entered the US and Norwegian markets in 2018. We bought a minor company in the UK 2019, meaning that we entered the market in the UK. And the last thing on here is that we developed it's not a software, but it's more like a framework. I'm going to come back to this a little bit later on in my presentation. Call it a starter package / framework that we call Excite, that we have developed on top of a software that comes from Commerce Tools. So today we are 100%, we call ourselves an expert company focused on modern commerce. Next slide, please. Our customers are active in 150 countries around the globe, and that kind of reach is, of course, a consequence of us focusing very much on the digital side of things. And it says here that we are 350 plus experts on 3 continents. We have all in all 11 offices. Avensia is a Swedish company. We have our headquarters in Lund. We are very Skåne focused. We have 2 major offices, one in Lund, Helsingborg, soon opening up a bigger office in Malmö, and 4 more offices in Sweden. And then also we are present in Chicago in America. We have an office in London in the UK, Oslo, Norway, and then the Philippines, dating back to 2015. So this is where we are around the globe today. Next slide, please. Here are some key numbers about our business. I just mentioned that we are 350 plus. When I say 350 plus, I think that when we left 2021, we were roughly 320 employees in the company. And then we always have like 10, it fluctuates a little bit, 10 to 20% of the people working with and for Avensia are also consultants, which is, of course, a very common thing to find in our industry. So over the last 10 years, we have managed to grow the company 26% average per year, a growth that with some minor exceptions has been completely organic. We don't have a big M&A history. We are a company that is confident enough to grow on our own terms and conditions, I would say. We managed to generate a 9% EBIT margin in 2021. If you look at our reported numbers, that number was, I think, 5.9%. But we had two very distinct non-recurring items. We had a management shift. We got actually our old CEO made a welcome return in 2021, Robin Gustafsson. I think it was the 4th of March 2021 when Robin rejoined on an operational level. And that costed us some money, that change of CEO. And there was also a product initiative that was stopped. And we took a one-time write-down of 6 million. So we had almost, I think it was 10.4 all in all million SEK that we took over the P&L in 2021 that has been backed out, generating this 9% margin in 2021. I'm writing here that 90% of our business is recurring. It's recurring from the perspective that we are not a software company. I think that's one other thing that was kind of, I shouldn't say clarified in 2021. I also don't see that we are a consultancy business. We are an expert and know-how business. Recurring revenue for us is that all revenue that we will generate in 2022 to clients that were clients already 2021, that is a revenue that we define as recurring. So most people, most clients that do come to us, they stay for a very long time, which we are grateful for. And I think it's a strong testimony for the value that we are able to deliver to our clients when we find the right kind of clients. And I should also say that the right kind of clients find us. We are not for everyone, but when we do find a good fit, it's really a lot of value that is being generated. Our turnover in 2021, close to 400 million SEK. And I think that the Nasdaq First North Premier thing was mentioned already when I walked you through our timeline a little bit previously. Next slide, please. What is it then that we do? I have tried to express it a few times, and I think this presentation is obviously tailored for you as an audience. I'm a finance person, and I normally say to my colleagues in the office that I understand very, very well from an intellectual perspective what we do. When it comes to the technical side of things, there are many things that I don't understand because they go so deep on a technical level. But I think that you can click one time, please, and I will get a highlight where our customer journey often begins. And it begins where here it says manage product information. Actually, there is the word strategy in the inner circle here, which I think is often the entry point when we first meet a client, that we sit down and we do a strategy session lasting for a couple of weeks in order to see if we are right for the clients and if the client is right for us. But when that conclusion has been done, often the first step is to manage product information. To sell digitally requires that a lot of product data needs to be sorted and structured and put into different databases in a very, very particular way, enabling a high volume of transactions. So this is often something that we do for our clients, and it's often kind of a prerequisite and a condition for us to go into the next step. So if you click again, please. And that is to develop future-proof e-commerce platforms. So this is the actual interface that I and maybe many of you will run into. For instance, this is now showing naked. when we actually go into Naked's site and that we want to buy something. That is what we do and what we create. And as I mentioned before, that we have this product information thing as kind of a base to then creating a user interface where consumers come online and consume from one of these sites that we develop for our clients. This is a work that normally takes a couple of months, and the sites that we manage to put together are often come with very, very high performance and generate great results when it comes to sales. And also another very important aspect is that they can take severe amounts of traffic and transaction loads. I don't know if you see it, but it says Black Week here on this little picture. I think Naked's transactions during a period of Black Week goes up like 10 times to what they normally have. So there are extreme loads during certain period of times. And of course, it can't be stressed enough that it's really then that you need to have a solid and working foundation for your online sales. Next, click again, please. After a launch of typically a platform that we have developed for our clients, follow then could be for many, many years where we continuously optimize and improve the work that we have done for the clients. Everything is constantly changing and constantly evolving around us, meaning that these platforms and the technical architecture and infrastructure need continuous kind of fine-tuning to continue to perform. And it could also be that the infrastructure, the general IT infrastructure of the client changes, and then we need to come in and make sure that the parts that we have developed for the client continue to work in a sufficient manner, also in the context of the new IT infrastructure that gets introduced at the client side. Next click, please. A thing that becomes more and more important today is for brands and companies to really build a relationship to their clients. This is one of the most important aspects out there right now. The people who does this well are presently successful online. So this is a very, very important work also for us to assist and help and in cooperation with our clients build strong customer loyalty that is also driving sales longer term and also shorter term, obviously, for our clients. So this is a bit more, I should say, not at all detail oriented, but hopefully giving you some kind of feel for what it is we actually do for our clients. Next slide, please. As I said before, and I think this is an important aspect, and I don't think that we have been confused actually ourselves around this, but we are not a software company, as I said before. We are an expert and know-how company. And obviously, we work with a lot of partners who are software companies and who provide software that we use as building blocks in these solutions that we create for our clients. And you can see some of these software companies on this slide, and we work with them in close cooperation. Some of them are we have worked with a very long period of time. Optimizely, I think, has been absolutely instrumental for Avensia's growth journey, and I know that we have been very important for Optimizely as well. Optimizely was formerly named Episerver. Commerce Tools was a new platform that we started cooperating with. I think the first client was in 2020. So we're now 2 years into that partnership. Very, very high potential and a lot of great clients and projects already done on commerce tools. Voyado is a software that often gets introduced when we come to this loyalty aspect that I mentioned on the previous slide. InRiver and Riversand are both software dealing with product information that I also talked about before. So we are really operating on a foundation of software from trusted partners and long-term partnerships that should be highly beneficial for us and hopefully as well, obviously, for our partner companies. So if you click again, please. Both these concepts or names, Excite and Nitro, they were on that timeline that I showed previously. Because what we have developed, I think Nitro was in 2016, Excite was in 2020, is that on top of optimizing commerce tools in this case, we have made a lot of development work. That means that our clients are, if they come and there is a good fit with Avensia and we start helping them, is that we can give them kind of a framework that already consists of a lot of things that we have developed, but not really a software in a sense that it can be taken down from a shelf and sold in big volumes, but it decreases the time to market and it takes down the cost for the development projects that we do for our clients. So we do use Excite and Nitro as kind of concepts and names for things that are part of our offering, but I wouldn't call them straight out software products. Next slide, please. Coming into the financial side of things, which is obviously why I am sitting here and basically presenting this for you today. Revenue and margin, we have been growing strongly over the years. We have had profitable growth. Obviously, it costs a lot to grow. And here you can see that the operating margin shows 6% for 2021. Previously, I was talking about 9%. The difference being these 10 million that we took as non-recurring costs in 2021 as kind of a, I shouldn't say turnaround, but I think it was a little bit a turnaround situation that we had when coming out of 2020 going into 2021. So this is revenue and margin for 10 years. You can see that the 2020 we had a thin margin of only 1%. I think we, as many other people, we were affected by COVID, but we continued to recruit. So and took a hit in our profitability, but we did it deliberately in 2020, and now we are heading towards more profitable times again in terms of margin. Next slide, please. Cash flow. It says here dividends. It should be dividends, not dividends. We are a company. I think that we have been giving a dividend now for 10 years. We believe in dividends as a way to create shareholder value. And we have a cash flow that supports that. There is a proposal on the table for our upcoming AGM to dividend 0.65 Swedish krona per share in May, consisting of 0.4 SEK in ordinary dividend plus 0.25 as an extra dividend. So, and we have a cash flow from our own operation that supports this because we are not involved in a lot of M&A activity or investing in other areas or tying up a lot of capital in our balance sheet. So we have a strong cash flow and we use it mainly to dividend money out to our shareholders. Next slide, please. High return on equity, and that is typically what you should see in a company like Avensia. We are not requiring a lot of capital to grow. We are mainly tying up money in our accounts receivable side of things from quite natural reasons. When we grow, 30 days of sales is simply becoming a bigger and bigger component in the balance sheet. Besides that, we don't tie up a lot of capital, so that's why we can show high numbers when it comes to return on equity. Next slide, please. This is not rocket science. We are a people business, and obviously we are recruiting a lot of people. So this is just to give you a feeling for how we have grown from a people perspective over the years. 350, this is now the number of actual employees of Avensia. I talked about 350 plus before, but that also including the many talented consultants we work with. Next slide, please. Shareholders, I included this on the financial because I think it's a very important component when you talk about Avensia. The three top shareholders of the company, controlling some 56, 57%, whatever, are all active in the company. You can see my own name on the list with a bit more than 10%. Our CEO is one of the shareholders of A5 Invest, Robin Gustafsson. Our chairman of the board, Per Wageus, is the majority owner of Valid Asset Management. So we are very much people of flesh and blood working in the day-to-day operation, and I think that's a key component in our development as a company historically, but also hopefully going forward. Next slide, please. I talked about this, new customers versus existing customers. I mentioned the number 90%, so we have an extremely solid revenue foundation, sometimes frustrating our salespeople who are out there and looking for new business because our capacity is obviously prioritized for existing client relationships. So, but this is obviously a revenue model that we like, that we work with very long-term relationships and steady income streams. As opposed maybe to people who are just more kind of hiring out their people on a few weeks or few months' time as more as resources. Next slide, please. Here you have the 10-year story of our actual share. We have created, or the return, or whatever you should call it, 1,400% something over a 10-year period. It's been a good development, a nice development. We have outperformed a lot of other stocks and shares. And so this is where we are today. Can never predict the future, but this is obviously the history, and a history that we are quite proud of from a shareholder value kind of perspective. Next slide, which is also the last one. I think I've taken up too much time already. Why should you potentially invest in Avensia? I think we have a very solid strategy of what we do. We have a people focus in our business that I have seen in very few other businesses. I talked about the shareholder situation, people of flesh and blood taking care of day-to-day business. We have this extremely solid customer base of recurring clients. We have shown sustainable and profitable growth. We have a very high return on equity, and we have strong cash flow that we, in the majority of that is used as dividends to our shareholders at the same time as we are not curtailing our future growth perspective. And that's what I'm going to tell you today. Thank you so much, and sorry for taking up too much time, Simon.
Thank you, Anders. No worries at all. Unfortunately, we don't have any time for any Q&A session, so we will have to end it as it is today. But thank you for a very comprehensive and also very colorful presentation, and I wish you a pleasant rest of the day, Anders.
Thank you so much, Simon. Thank you. Bye-bye.
Bye.
Hello everyone and welcome to this presentation with Ørn Software here at ABG Investor Days. My name is Øystein Lodgaard. I am an analyst that cover Ørn Software here at ABG. And with me today I have Sten Roger Karlsen, which is the CEO of the company. So Sten Roger, please go ahead.
Good afternoon, everyone, and thank you, Øystein, and thank you for inviting me to the Investor Days. I am very delighted to speak to you today about Ørn Software. Slide 2, please. I have added a disclaimer to the slide deck. Please read it if you choose to download the presentation afterwards. Slide 3, please. So, my name is Sten Roger Karlsen. I'm the CEO at Ørn Software. I have been with the company since 2017, and I have been the CEO the past 3.5 years. I have a Master of Science degree in construction, and I have been working with technology and software for more than 20 years now. Slide 4. So Ørn Software is a leading Nordic software as a service company. We deliver mobile and cloud-based software solutions which our customers subscribe to. Many of our customers have a lot of property, technical equipment and assets that must be operated, managed and developed in a sustainable and efficient way. There are 1,000 details to keep track of, and therefore we are very committed to giving our customers insight into all the details in their operations, while at the same time giving them a complete overview. We currently have 177 employees at 12 different office locations in 5 countries: Norway, Sweden, Denmark, Iceland, and Finland. Slide 5. Ørn Software helps a wide range of industries with value creation. We do this by offering a broad portfolio of software that solves specific challenges that these industries face. We have customers in industries like production industry, food and beverage, real estate, construction, and aquaculture. And by digitizing work processes and by helping customers become more data-driven, we contribute to increased interaction and improved quality, efficiency, and sustainability. And managers within our customers use the solutions to plan and optimize operations and increase utilization of their properties and assets, while the operators are using it to efficiently carry out day-to-day activities and maintenance tasks. Slide 6. Ørn has a strong position within 3 market segments. 1, real estate management, with 150 million in annual recurring revenues, or ARR in short. Number 2, industrial maintenance and quality control, with 55 million in ARR. Number 3, energy and sustainability management, which is a new segment from 2021 for us, with 16 million in ARR. Slide 7. We absolutely love software as a service, and we live and breathe with it every day. It is so much more rewarding for us to focus on customer happiness, success, and value creation, rather than running from one software sale to another, like we did in the old days. Recurring revenue creates a huge predictability for our income, not only short term, but for years to come. Makes it a lot easier to balance investments versus performance metrics and profitability. And it's not given that a SaaS solution is sticky, but if you are committed to the SaaS business model's best practice and continuously focus on your product market fit and customer success, your product will end up having a low churn. Low churn means high lifetime value and consequentially high return of investment on sales, even if sales cycles are long and customer acquisition costs high. Selling software in the cloud leads to extreme scalability, with gross margin typically between 90 and 100%. 2021 was an excellent year for us in Ørn Software when it comes to all these important metrics. Slide 8. Annual recurring revenue is the most important metric for us. With a low churn, in our case, no more than 6% in 2021, the recurring revenue run rate gives a fantastic predictability in the cash flows. And in 2021, we grew our ARR with 111%, partly driven by M&A, but even organic growth has been as high as 14%. We delivered a 24% EBITDA margin, set to improve significantly going forward, which I will come back to, and a gross margin of 89%, which is evidence of great scalability. And finally, to the right, I give numbers on our lifetime value of a new customer in relation to the cost of acquiring the customer. 15 times in the real estate management segment, and as much as 24% in the industrial maintenance and quality control segment. So to sum it up, we are in great shape in a great industry. Slide 9. There are some key trends that are driving the demand for our solutions. Our customers need to continuously improve its efficiency to stay competitive and relevant. And implementing digital tools that are easy to use and that simplifies their workflows is an important part of meeting this need. We also see that regulatory demands are getting stricter and reporting needs are increasing, and especially within the sustainability area related to the green shift and green financing and the people's increase in social responsibility in general. And then you have the mega trends like digitalization, smart buildings and industry 4.0 that are pushing the technological development, introducing prop tech, IoT, artificial intelligence as examples, which in turn again enables increased efficiency. So we have positioned Ørn to deliver on all these areas and to help our customers meeting tomorrow's and today's needs and demands. Slide 10. Some key figures. We have close to 2,000 customers with 280,000 daily users of our software solutions, and they are using it to manage 1 million technical components, 38,000 residents, and 100,000 buildings, covering close to 90 million square meters of floor space. Slide 11. Taking a step back to our near history, during the recent years, we have had extreme growth. Our growth journey started when the private equity firm Viking Venture invested into our company back in 2017. And at that point, we established a growth strategy focused on the buy and build story and customer success. By following this strategy, we've been able to increase ARR with more than 10 times since 2017. Much of the growth is driven by 9 acquisitions, but we have also succeeded with organic initiatives and increased ARR organically with a CAGR of 28% during the same period. By the end of 2021, Ørn Software had a total of 220 million in ARR. Slide 12. Ørn's consolidated revenues were 194 million in 2021. And this is based on P&L figures according to Norwegian GAAP, which means that the acquired revenue only is reflected from the month of the actual acquisition. The revenue CAGR has been 55% over this last 3 years. The adjusted EBITDA has grown with a CAGR of 128% over the same period, which is a good indication that we are slowly moving towards our own long-term profitability goals. Slide 13. We are very proud of our customer base. Not only does it count almost 2,000 customers, but it contains many large and well-known Nordic brands. In average, our customers stay with us for more than 10 years, which result in a very low churn. Our customer base has more than doubled during the last 18 months. Slide 14. Being a software as a service company, our business model is focused on achieving a high percentage of recurring revenues. And in addition to selling our software solutions to new customers, recurring revenue growth has been achieved by following an established growth model. We have been acquiring successful SaaS businesses that fit into our product and business strategies. Acquisitions in the past have been motivated by consolidating core markets, expanding the product portfolio, and by geographical expansion. We will use this experience from the 10 acquisitions in the past to succeed with new acquisitions in the Nordic countries as well as in Europe going forward. And then customer success is an important part of our business model. If we are to succeed with upselling, cross-selling, and be able to make price adjustments without the customers canceling their subscription, we are dependent on them achieving success by using our solutions. By working closely with our customers, we ensure that we deliver the digital tools they need to be able to increase their quality, efficiency, and sustainability. And we ensure value creation and customer satisfaction. To increase the percentage of recurring revenues, we are constantly looking at opportunities to convert services from typical non-recurring activities to recurring subscriptions. And last but not least, we invest in product development. Firstly, to bring new products and features to the market so we can maintain our competitive power. And secondly, to ensure that acquired products fit into our best-of-breed offering and may be delivered to our customers as combined and integrated solutions. Slide 15. Our current market in the Nordic countries is a 14 billion market, where only 22% is addressed. We have just scratched the surface in terms of the potential in our home market, and we still see significant M&A opportunities here. But there is also a huge upside by scaling into other digitally advanced markets in Europe, like the DACH countries and heavily industrialized neighboring countries like Czechia and Poland, as well as UK and the Benelux. These areas combined represent a 55 billion market, in addition to the market size of the Nordic market. And here only 10 to 20% is addressed. Because these markets are still in its digital infancy, the spend in this space is set to grow 15% annually over the next 5 to 10 years. Slide 16. We exited 2021 in great shape and after a tremendously exciting and busy year. Our top priority in 2021 has been to successfully execute on our M&A strategy and welcome the acquired businesses following our proven model of post-merger integration. We also worked hard strengthening our sales organization. Our sales force has worked systematically with building a pipeline of new business, and going into 2022, this pipeline is very healthy. During 2022, our main focus will be on reaping the benefits of being more than twice as large as 1 year ago. M&A is less of focus right now, and I really look forward to unleashing the full force of all the new colleagues, focusing solely on helping customers, attracting new customers, and driving growth in Ørn. We are continuing to scale the commercial organization, and 6 new sales reps will be hired during this year. All in all, during this year, we'll be able to take a step change in terms of profitability and cash flow. As you can see here, we expect our adjusted EBITDA margin to improve from 24% in 2021 to the targeted range of 28 to 30% in 2022. Combined with a revenue target of around 250 million, up from 194 million in 2021. The CapEx as a percentage of revenue will remain stable and hopefully and somewhat lower than in 2021. The CapEx as a percentage of revenue is expected to be reduced in the years to come, which implies an expected significant boost in the cash earnings. The implication is also that we expect to be cash positive in 2022, also including interest expenses. Slide 17. We have set out a few long-term high-level targets as well for 2025. By the end of 2025, the goal is to have grown organically to 430 million in ARR. This means that we expect growth in ARR to accelerate gradually in the years to come as our pipeline materializes and we get increased effect from the growing sales force. Our SaaS solutions scale extremely well, so by 2025, our goal is to reach an EBITDA margin above 40%. And market-wise, we want to be recognized as the dominant best-of-breed player in the European market. Slide 18. Oh yeah, that was the last slide. Sorry for that. Thank you very much for your attention, and thank you for inviting me.
Thank you very much, Sten-Roger. Then we can go over to some Q&A. So like you said, M&A is less of a focus for you right now, and you have completed a lot of transactions over the past year. What do you think you can do with all these acquisitions that you made? Historically, you've been very good at driving the ARR growth. What are the key initiatives that you're going to implement in these acquired companies?
Yeah, we sure see opportunities to realize synergies from the latest acquisitions that we've done. Obviously, cross-selling our products to existing customers is one focus area, but also working more efficiently on, I would say, administration and development of new products and technology, resource sharing as one example. Product management is one of the areas that we always address early on in the post-merger integration process to synchronize roadmaps and enable the delivery of combined and an integrated solution to our customers into the market. And then this process often leads to adjustments in work processes and to sometimes also to the organization to ensure that we work more efficiently and streamlined as possible. So I think also given that we have been in a or in a COVID situation, these integration processes and making all these changes takes a little bit more time because we haven't been able to kind of meet so often as we have been doing in a normal situation. But we for sure will do some adjustments that will give us synergies.
It's very interesting that you mentioned cross-selling with multiple solutions now. Can you try to quantify the kind of cross-selling potential that you see in your portfolio today?
Yeah, well, we did a large project during second half of last year to identify cross-selling opportunities in the portfolio after the new acquisitions that we did. Looking at our products, talking to almost 20% of our existing customers to really understand the market dynamics and the need out there, and to enable a structured approach to this new and large cross-selling opportunity that we have. Then we have established a lead scoring system based on ideal customer profile and personas so that we ensure we approach the lowest hanging fruit first. The project is being implemented now in January, and it will be interesting to follow this in the months to come. So to sum it up somehow, the potential is large, that is identified. The project is implemented, but given that even cross-selling is selling, we still expect to witness lead times according to each kind of product's sales cycles, which means for some of our products, we need to be patient to see how and when we can kind of materialize on the potential that we have found.
Very interesting, very interesting. We also see some larger players in the software space raising prices pretty significantly, like for instance, Microsoft. Could we also see you do some price hikes in your portfolio over the coming year?
Yes, changing price models on the acquired companies to ensure that they are flexible and scalable, that like we have done over several years in Ørn, is always a priority. And sometimes these price models are almost like we want them even before the acquisitions, and sometimes we have to do a lot of changes. And we also could consider kind of the price levels and try to balance the price point with the actual value that we create towards our customers, and also, of course, look at competition and so on. But price adjustments will continue to be an important part of our organic growth. But as we grow bigger, I expect the price hiking part to become less dominant than it has been historically. This is also the reason why it's important for us to kind of build a strong sales force to enable organic growth through new sales and cross sales in addition to price increases.
Interesting. And you also have invested in more salespeople to drive more sales by bringing in new customers. Have you begun to see some effects of this already? When do you expect to see effects from this?
Yes. Organic growth and profitability are our main focus areas in 2022, and that is why also we have continued to scale the commercial organization. And we also did that in 2021, so we did see some positive effects in Q4 with an organic growth of 14%, and we believe this positive trend will continue into 2022. That being said, some of our products have a 12 to 18 month sales cycle, which means that it sometimes takes time to kind of close sales, even if activity is high and leads are pushed through the sales funnel. However, I think the hard work that is put into the sales has increased lead generation and provided a pipeline that is very, very promising for the period to come, and the activity is very high. So I have great belief in success in that area in 2022.
Looks like Ørn has a very exciting year ahead of itself. Thank you very much for taking the time to present to us today, Sten Roger, and thank you to everyone who listened in. Have a good day.
Thank you very much. Bye-bye.
Hi all, and welcome to this presentation with the Maha Energy. My name is Stian Vipstad, and I'm an equity analyst at ABG. And allow me to introduce Victoria Berg, Investor Relations Manager with Maha Energy, who will be presenting the company to us. So Victoria, please go ahead.
Hi everyone, and welcome to the presentation of Maha Energy. As Stian mentioned, I'm the Investor Relations, Victoria Berg, and this is the first time I'm presenting the company. So I know that a lot of you are tired about talking about the pandemic at this point, but that's actually the reason why I'm here for the first time today. I had only been at Maha for about 6 months when the pandemic started and only had one chance for a physical meeting to meet a few of our shareholders before we entered this digital world. So I know I'm talking to you through a camera today as well, but I'm very happy to be here. And I can also say that today I can not only see the light in the tunnel, I can actually feel the light hitting us. And as a company, we feel very strong and very excited about the future ahead of us. So yeah, I'm really glad to be here today. And today I will go through a bit more of who we are, what we do, and our assets. And if you have any questions in the end of the presentation, please don't hesitate to reach out to me. Next slide, please. So the disclaimer, more or less that these are forward-looking statements and are subject to change. Next slide, please. So we are an oil and gas company. We are not an exploration company, but an exploitation company. We look for fields with already existing and discovered oil assets that may be underperforming, where we can use our expertise and knowledge for oil recovery. We are a value-driven company where we not only look for quantity, but also quality, as in dollar value per barrel. One of the company's strategies is our three-legged stool, which means that we want to spread risks, both geographical, political, and economical, and operate within at least 3 different jurisdictions. So at the end of 2020, we accomplished that by adding Block 70 in Oman. We are also a very conservative company, so another strategy for us is to spread our asset base. So 50% is stable production base, which is very low risk, reliable production, and predictable cash flow. 40% is developing assets through turning resources into reserves, and 10% is near field exploration. So this may be deeper reservoirs or just near field exploration. Next slide, please. A little bit more about who we are. We were founded as a private company in 2013, first listed in 2016 at Nasdaq First North in Stockholm, and then uplisted to Nasdaq Main Market by the end of 2020. So we're currently listed at the Nasdaq Stockholm in the small mid-cap category. We have a market cap of roughly 1.7 billion Swedish kroners, and our 2021 revenue landed at 68 million USD. We have about 80 employees today, and we have 5 producing assets in 3 different countries. We have 2 assets in the United States, LMK Ranch and Illinois Basin. We have in Brazil, we have Tartaruga and T Field, and in Oman, we have Block 70 Mafraq oil field. We have a 2P reserves by the end of last year at about 37 million barrels, and certified resources in Oman of roughly 33 million barrels. Next slide, please. So here you can see our key metrics. The company have always had strong finance metrics. You can see here on the left-hand side how we have increased our production throughout the last years. We have quadrupled our production from about 1,000 barrels a day back in 2017 until about 4,300 barrels a day at the beginning of 2022. And we aim to go down that path again by quadrupling our production once again. We have been profitable for 18 quarters in a row if you exclude the write-down of LAK at the end of 2020, which was a result of the low oil prices seen during that year. And you can also see our netbacks, and that's what is left of the operations costs and royalties have been paid. So as you can see here, we have a very healthy netback that is reinvested into our operations. So by the end of 2021, the royalties in Brazil were reduced from 10% to 7.5% for both our fields. And the new royalties will remain at this level as long as the company is seen as a mid-sized company, which means not producing more than 10,000 BOE per day on a global basis. So with these royalties, the Brazilian fiscal terms are among the best in the world. So with current oil prices, the company has a very healthy cash flow. Next slide, please. So nevertheless, as an oil and gas company today, we are obliged to make our best effort in doing whatever we can to decrease the operational impact we have on our planet. In 2020, the company started its ESG initiatives, and in April 2021, we released our first sustainability report for 2020. So you can dive deeper into this and details about what actions the company are making in the report that is up on our website. But you can see some of the examples here. For example, we recycle and re-inject all our water, except on Tartaruga, where this is not possible due to reservoir pressures. So at Tartaruga, all our water is trucked to a licensed and environmentally certified disposal plant in Bahia. All our gas is being handled, and we have tight flaring restrictions. So in Brazil, we convert and sell most, around 85% of our gas into electricity and CNG, compressed natural gas, to local ceramics factories. And next slide, please. So our assets, the T-fill is our cash cow really, and it's an onshore asset, which is, as is all of our assets per today. This field was acquired back in 2017, and it's located in Bahia, near Salvador in Brazil. So this is the company's engine today, really. We have 6 producing wells here today and are planning to drill another 2 new wells for 2022. We recently drilled and completed our 6th production well, T4, which is now in production. The well tested 4,695 BOEPD, which was a record volume for a single well on the T field. It was also a record well for Maha and ranks as the 3rd best ever well on onshore Brazil. So this is, of course, very exciting results for the company and our shareholders. And this well, together with the new well T5 that is just now being drilled, gives us that extra capacity to maintain a balanced and strong production at the field. So with this, we should reach our plateau at the field to around 5,000 BOEPD. And next slide, please. Tartaruga. This is located just north of the T field, We have 75% working interest here, and Petrobras has the remaining 25%. So this is a completely different basin than at the T field. We have had some problems figuring out the geological reasons and difficulties on the north side of the field. So we are now focusing even more on the south, the more productive side of the field, where we today have 2 wells in production, and we aim to start another 1 well this year. Next slide, please. So Mafraq oil field. This field is located in Oman. We won the bidding of operating Block 70 Mafraq in Oman at the end of 2020. So Mafraq is a heavy oil field that was first discovered in 1988. And this is a very shallow field at only around 500 meters. So this makes development costs here very low. And the field has already shown significant amount of oil. So this is a classic example of us as a company, which is not exploration, but developing already existing oil fields. So the field have already since earlier 4 wells, and the plan for us is to start test production during 2022 and drill another 6 to 8 wells before the end of 2023. Next slide, please. So Illinois Basin. The asset is located just across Illinois and Indiana in the United States. And the acquisition of Illinois Basin was made in the middle of the pandemic and represents our agility to move quickly. And we had a strong cash balance at the time, and this was a distressed asset with very low risk. So we're always keeping our eyes open to different kind of openings and opportunities. And this was just like that. We gave a very low price for a very stable and healthy asset. So this is very low risk asset for stable production. And these wells are though at a higher operation cost than, for example, the Brazil assets. But at these high oil prices, we are making very good results. So we have 33 wells at different locations in the basin, and we aim to drill around 2 wells in 2022. We started drilling 1 well, Glaze 11-5, on March 1st, and the well takes about 4 to 6 weeks to complete. Next slide, please. So LMK Ranch is located in Wyoming in the United States. This field has been a challenging asset for the company, and due to very low oil prices during the pandemic, we decided to shut down the field, and it has remained shut in since then. Today, when the oil prices are back up again at higher levels, we are evaluating how we can and if we should proceed with the field going forward. Next slide, please. So some company highlights over the last 2 years. I mentioned most of this already, but we are listed on Nasdaq Stockholm main market. We are a refinance company for growth with BTG since March 21. We continue year-on-year growth with record net results in 2021. We added Oman Block 70 and the Discovery Mafraq heavy oil field. We have our 3-legged stool strategy completed and 10-40-50 asset pyramid shaping up nicely. So in the States, we acquired Illinois Basin during the pandemic. We have increased production from 160 to 500 BOPD since acquisition. In Brazil, T4 tested 4695 BOEPD, and royalties have been reduced from 10 to 7.5%. In Oman, we were successful in the bidding of Block 70, and we aim to start long-term production very soon. And if you go to the next slide. Next slide. We can, as I mentioned before, if you have any questions, please don't hesitate to reach out to me, and I'll be happy to be as helpful as possible. Thank you.
Thank you for the presentation. We have some minutes left for a short Q&A, so I'll kick it off. First question goes to your 2022 production guidance. As you said, the Thai 4 well performance has been very positive. And if we were to assume that this level continues, what is your thoughts around the current guidance range?
It's too early at this point for an eventual guidance revision, but we do have confidence for a strong production during 2022. And we also aim for a plateau at the T field of about 5,000 BOEPD. So as I mentioned before, with T4 and T5, we should have that extra capacity to remain on plateau during 2022 and beyond. For example, in case some other wells needs to be shut in for maintenance, we should be able to maintain plateau volumes. So it's too early at this point.
Yeah, makes sense. And you also talked a little bit about your Oman block. Can you maybe elaborate a little bit on how your Oman operations are progressing and the status on the potential farm down?
Yes, so we're taking more and more steps into getting equipment to place and starting the planned test production. In terms of production, we do need to see where we will end up with the potential farm down. We are still in negotiation with a potential partner in regards to that.
Can we expect to see some news related to Oman maybe in first half this year, or is it too soon?
It's hard for me to answer that question today, but I mean we are in negotiation with a potential partner. So as soon as we have anything, we'll let you know.
And you have of course done some M&A in the past, and given the recent high, of course, oil and gas prices, are you looking at any other inorganic growth opportunities?
Well, we're always on the lookout for new opportunities, and as long as we see and believe we can add value, we're interested.
And are you also interested to expand your operations beyond your current geographical presence, or mostly within the same areas?
Well, it's the same there really, except that we're just getting settled with the new Block 70 in Oman. So we're gonna try to focus on our current assets, but it's the same really, that we always have our eyes open for new opportunities.
Yeah, I have a couple more. You've also talked about cost inflation recently, like of course many other companies. Can you elaborate a little bit on which parts of the operations that are most exposed to this, and to what extent you're seeing it?
Well, it's like all sectors. We're struggling with delivery times, costs of shipping, and lack of raw material. So this affects all our operated assets. For example, in Brazil, we are waiting on a premium gas tight tubing for our gas injection well.
And are you seeing any improvements on the horizons, or is it difficult to specify?
Well, I mean, of course, it's been a bit more. It's been more. How do you say? The delays have been more during the pandemic, of course. But of course, we do see that it's getting better, but it's still consequences.
Makes sense. And also, with regards to your 5-year plan, is there anything new to add here? I'm thinking about impacts from potential changing production profiles, recent high oil prices, Thai for well performance, and so on.
Yes, of course. As you mentioned, there's a few updates that needs to be done. The 5-year plan we have up on our website is something that we're working on to update at this moment. So we should have a updated version out in soon future.
Great. Yes, I don't think you've answered most of my questions and then some. So thanks a lot for that. Do you have any final remarks?
No, I think I'm happy. Thank you.
Then thank you very much for this presentation and the Q&A. And thank you to all who listen in, and have a good day.
Thank you.
Thank you.